Let's talk about today's live stream sponsor, ProfitX. ProfitX allows traders to get up to 1.2 million in simulated capital for their trading. But on this simulated trading capital, you get an 80% profit share of the simulated profits. That's real money on simulated accounts. They also offer unlimited trading days to their traders, so there's no kind of number of trades you can or can't place during the duration of your challenge. They also allow their traders to trade 800 plus assets, so you can pretty much trade anything with this one prop firm. When we look into sponsors for this show, we do also make sure that the team behind the scenes seems as professional as possible. This is a big team, not a kind of influencer or solo run ship. This is a professional team running ProfitX, so I want to encourage you, check them out, do your own due diligence, and see if this is the right firm for you. Now back to the stream.
All right, everybody. Good morning, good afternoon, wherever you are in the world. Thank you for tuning in. We've got retail sales this morning, which will be interesting to see if it moves the market. I mean, yesterday was a huge win for markets. Inflation settled some of the fears out there. We had a lot of concern around the inflation story yesterday was, are we going to get inflation to tick higher? Are we going to get, danger zone levels kind of surfacing for inflation? And instead, we got kind of a mild read, which followed a soft read on Wednesday's or Tuesday's producer price index. So if we take a quick look at everything here today, producer price index came in light, followed by the consumer price index, which also did tick higher, but quelled kind of concerns or expectations. Hope everybody's doing well. Hope you're having a nice trading week. This has been a heck of a week, to say the least. Very volatile. A lot of moves, a lot of things on the move, metals moving, you got stocks moving, you got currencies moving, a little bit of everything. Gold is taking a move higher here. Actually very impressive here today, considering there was some good news out of the Middle East. There was, again, if you guys hadn't heard already or seen that, some peaceful resolutions came about when it came to the Israel and Hamas conflict that is going on. And I was actually surprised to see gold continue to move higher off of that number. I mean, I suppose you had CPI and PPI, which were definitely good news for gold, right? Softer inflation is good for gold. That may not sound intuitive at first glance, but it does make sense, because if the Fed cuts rates, that is very good for gold. And if the Fed does not cut rates at all, it is not so good for gold, because it makes the dollar strong or weak, right? So with inflation numbers coming in nice and soft this week, right? With soft inflation numbers means the Fed may not necessarily be like ready to cut rates right away, but we were talking about, guys, there's a lot of people talking about rate hikes in this week, talking about how they think that there's a possibility. There was at some point, the FedWatch tool had a 30% chance of rate hikes this year, which is crazy. So, we've seen a little bit of that go out the window, which is arguably a very positive thing for gold. A rate hike for gold would most likely not be positive. Rate hikes, in fact, if we go take a look at like the rate hiking period that was 2022, you can kind of see what happened to gold during that time. Throughout the duration of those rate hikes, gold was put under pressure. And then, of course, we kind of talked about no longer cutting or hiking rates, and then we went into this, upward sideways range. And then once we started really talking about rate cuts, gold really got excited. So there's a little bit of that side of things. There's, something to think about here with gold too is that there's a lot of questions about inflation. There's a lot of questions about geopolitics, but with geopolitics getting a little bit better, I would actually argue that's not a positive thing for gold, right? Geopolitics being a concern is usually a positive thing for gold. I also want to show you guys something really exciting. I was working on this yesterday, and it is finally at a point where I can pull this up and we can use it for streams. This is the brand new US economic heat map on the Edge Finder. Possibly and very quickly, my favorite page on the Edge Finder, because it pretty much accomplishes the full goal of the software in a singular page. The US economic heat map page that we just added to the tool will allow you to look at everything that the Edge Finder is monitoring in one screen to get a better idea of how the economic data in the United States is falling. So what do we see right here? Well, we don't have to go through it bit by bit, but generally speaking, this section right here is going to be your economic growth section. Here is your inflation section. Here is your jobs section. Let's just give a quick synopsis here. Growth looks really strong. Inflation is doing okay. And jobs look strong. Without having to dig through 37 different CNBC articles to get an idea of how the economy is doing, we don't need to do that. This tool makes it a possibility to just look at, from a bird's eye perspective, what is the US economy looking like? I'm thrilled to have this because this makes my job as a commentator in the space and as a fundamental trader so easy. I have everything in front of me, and right now I can very quickly determine, what are we looking like? Should the dollar be strong? Should stocks do well? Well, we can get a better idea of that just by pulling up this page. Now, of course, you can go through all the individual data like we do in the streams and videos all the time. And if you're an Edge Finder user, then you're probably well versed with navigating around all of the different data set that we have within the tool. But this page possibly is my favorite page now on the Edge Finder, simply because for economic data purposes, there is no place easier that I possibly know of than right here to have everything I need in front of me to look at this. So if you're an existing Edge Finder user, just a heads up, this is completely free to you. One of the cool things, and I just want to say, if you're an Edge Finder user watching this and you've already purchased our tools and supported our project, I want to say thank you, because truly, we build these cool features and these new tools, and we make them free to existing Edge Finder customers because we build them with the proceeds that people pay us to buy our tools. People always ask us, Nick, why aren't your tools free? Well, they don't build themselves, and they're very costly to build and maintain. But our existing customer bases helps us build the next wave of Edge Finder tools when they buy our tools. So it's awesome. And so to reward them, we give them those updates for free. So if you're an Edge Finder user, check out the US economic heat map. It's your one-stop shop to look at all the US data that we track in one place, forecasted values versus actual, and the change. I'm thinking of buying the software. Yeah, you should. It's a great tool. We work really hard to build this thing into what it is. We've been doing this since 2022. We launched the product. But the vision of building something like this goes back 2019, 2020. But to be completely, I've said this many times, there's multiple six figures invested in building what you see right here. There's a lot of stuff that goes into importing data, making sure that it's up to speed, and comparisons and the algorithms that are running, and it's a lot, but we love it. It's a really cool project, and we've been inspired by the community to keep pushing on and keep adding new tools and features that people are requesting. Will you be adding this for other countries too? Again, most likely. Over time, the tool has just gotten better and better. And let me be completely transparent. Here's your sales pitch for the day. The price goes up and up and up. You wonder why the Bloomberg terminal is like 20 grand a year or something like that. At first, I was like, that's insane. And it is. But the amount of money they spend to build and maintain that thing is crazy. What we do is everybody who buys the Edge Finder now pays one time. You get access to all the future updates. But the price goes up over time. It's just how it goes because we have bigger and bigger bills that go into building and maintaining the tool. So if you're not already an Edge Finder user, there's your sales pitch per day. It's only getting better. It's only going up from here. If you don't have an Edge Finder copy, you should get one as soon as you can because it's a great tool and it will help you analyze fundamental analysis and macroeconomic data a lot better and a lot quicker. We've got about 2 minutes. Speaking of core retail sales, retail sales, what you can see here is retail sales month over month. Last time around came in 0.7 compared to forecasted 0.6. Let's see what we're looking at. By the way, again, if you want to get access to the Edge Finder, click this link. You can chat directly with our support team, or you can head over to a1trading.com and pick up a purchase there. Do you charge monthly for the software? No, it's a one-time fee to purchase the Edge Finder. Or if you can't afford the one-time fee, we can split up the payment for you into 3 monthly installments. If that's something you're interested in doing, the best way to get started with that is to send us a direct message on our website, and a support team member from my staff can help you out with that. So if you're interested in doing a payment plan or just purchasing the software, head over to our website and chat with us directly, or just go to a1trading.com/edgefinder to get more information. XL Trader says, hey, Nick, I went to your website and got extremely confused at the bundles area. I wanted to buy the Edge Finder together with the Discord community. Yeah, we can help you out. Just send us a DM. Again, this chat right here, this direct message link will allow you to speak to a support rep who can help you with all of that. So just let them know. We've got 1 minute, 20 seconds to go here, guys. I'm going to pull up our all markets view. Yeah, guys, if you're interested in anything, always the easiest way to do it is just to send us a DM. We have 3 wonderful support team members who will help you out with getting set up. And they are real people. They're my staff and handpicked wonderful people to help you out. Okay, so S&P 500 actually coming down here a little bit this morning. NASDAQ was up and away yesterday. Dow Jones down here a little bit. We'll see how this plays. Dollar index strengthening a little bit ahead of this. We've got just over 30 seconds here to go before we get retail sales this morning. Bitcoin back to 99,000, crossed over the 100,000 mark briefly, and gold is still ripping despite dollar strong. So very interesting. No problem at all. Happy to help. Yeah, like I said, easiest thing is just to speak with our support team. Okay, we got our breaking news coming in just 10 seconds or so. Okay, retail sales numbers should be coming in here. No major reaction as of yet. S&P 500 slightly higher. Dollar index slightly lower. 0.4% retail sales. That is lighter than expected. 0.4 was said in the chat if you're wondering where I got that number. And again, S&P 500 dipping here ahead of this. Okay, so 0.4% retail sales month over month, and core retail sales coming in 0.4% compared to 0.5. So a little bit light on that front. We also got unemployment claims, which came in slightly higher than expected, but not by a big margin. So overall, we'd say not a huge reaction, not a huge response from this, but let's take a look. By the way, we've got 792 people watching. Thank you guys for tuning in. If you're enjoying the show, do me a favor, hit the thumbs up button. It just helps to support the YouTube algorithm, and I appreciate you quite a bit. So gold is up at resistance here. Retail sales here not acting to really make too much of a move. Gold was moving ahead of this and now just kind of slightly moving a little bit more. S&P 500 5-minute chart, NAS 100 slightly higher, Russell popped and then dropped. Dow Jones pretty much unmoved. So not a big reaction here this morning. VIX dropping a little bit, but then popping back up slightly on this figure. Bitcoin's down 1.5% here, but we had a little bit of gains to give back on this one. Bitcoin absolutely ripped yesterday. Actually up above 100K once more, which very impressive bounce back. We went from 89, guys, 89, 100 to 100,000 in, what is this time period? 2 days. That's crazy. 13% move in the price of Bitcoin in 2 days. This thing is so volatile. Cryptos are just a wild thing to watch. Anyways, dollar index still looks strong. I mean, despite the cool inflation data, the dollar index still looks really strong. And when you ask how is the dollar still strong? Well, I would point to this chart right here. Most of this stuff is still very blue. Now, when we say blue, what that means is that it is a signal of strength for the US economy. Now, the not so strong thing for the dollar, I guess I need to think about this with this page, is that, soft inflation is good for stocks. This is really tailored to US stocks, right? Cool inflation, which we can see like right here, like PPI came in light. We've got that color-coded blue because it's good for stocks, but it's not necessarily good for dollar. That's actually weaker for dollar. So I might need to think about that. I might need to specify that this is good. Blue is good for stocks, not necessarily good for dollar. There are some nuances and some specifics there that don't go hand in hand. The dollar and gold and the dollar and stocks do not move up exactly the same. What's your bias on euro dollar? Yeah, so if I go look and see what we're getting told here on the data side, let's take out this. Euro dollar continues to be a bearish print on the Edge Finder. What that's doing, how is it getting a bearish idea? What the heck is the bearish reading on the Edge Finder mean? Well, it means that the economic data here, technical data and sentiment data that we are looking at, things like the commitment of traders data to track institutional money, retail positioning to track what retail's doing and to potentially fade them, seasonal trends in the market, momentum in the market, GDP numbers, PMI numbers, retail sales. When we consult all the data, the Edge Finder is leaning bearish on the euro. And it's been doing that for months, which has been one of the best calls for currency trading that I've seen in a long time, right? The euro dollar has just been melting away. And it's been also on the bearish side of Aussie dollar, Kiwi yen, pound yen. I mean, you can go back, if you don't believe me, go back a month or so on the live streams, and you will see that a lot of these same ideas existed and have been consistently bearish on some of these dollar crosses like pound dollar, Kiwi dollar, Aussie dollar. These have been bearish prints on the Edge Finder. I guess that's one of the cool things about live streaming every day is you can check what I'm saying. So if I say like Edge Finder's been bearish on this, or I've had this idea, you can go back and watch the live streams to prove or disprove what I'm saying. But anyways, taking a look at the dollar itself here, nice little, pullback in the last few days, but dollar strength still seems to be there, right? You've got a lot of reasons, in my opinion, to stay overall bullish on the dollar, even if it means a pullback for the next, week or so. I would still look at first glance at this 108 area as a bullish area for the dollar index. So, yeah, we'll continue to watch the dollar index. I do like it on the long side. And specifically, I'm looking at, for example, the currency pair dollar Swiss franc. I like this one. If you get a larger pullback, then I'm really interested in this, possibly trading this 0.9 area again on the long side. So I like that on the currency front. Euro dollar, I'm also interested in euro dollar shorts, but would have to get a little bit more of a press up into this resistance. So definitely liking some of the ideas that are on the Edge Finder, just waiting for some technical formations to come into play so that I can actually trade them. Bitcoin continues. Look at some of these readings, guys. Plus 15 on oil, plus 13 on Bitcoin. I mean, these two have been incredible call outs. Dow Jones, copper, dollar CAD, dollar Swiss, NASDAQ. My goodness. I'm long SMH. I'm also long the S&P 500. SMH is a semiconductor ETF. So I've had a couple good runners here recently. We'll see if the stock market continues to play ball here. NASDAQ, take a look at this. NAS is testing the upper limits of this trend line that we've been watching close. Take a look at this. I mean, I bet you a bajillion traders have this same exact idea of a line drawn. You've had resistance come into play each time you tapped up into this area. I think the NASDAQ is at a decision point where essentially the question now becomes, are we going to continue to play this range game and go back down here, or are we going to see the breakout? And in my opinion, I think a breakout is more likely to the upside. Number one, from just keeping it technical for a second, we still have a very dominant uptrend on the NASDAQ and the S&P 500. But on the fundamental side, the macro side, again, I'm showing off our new US economic heat map page. For those of you who are just tuning into the stream, if you're already an Edgefinder user, this is now available within your Edgefinder completely for free. Existing customers, existing users of the Edgefinder, you do not have to pay anything extra to get this new feature. We just added a new US economic heat map. It allows you to look at all of the data that we track for the US currently and all of the actual values that have been recently reported relative to the forecasted values that they had. So this shows you how strong compared to forecasts is the US economy behaving, right? So this is probably, I said this earlier, probably my new favorite chart on the Edgefinder. Is everything everything in one, right? All of the economic data that I want to look at in one singular spot on the screen for me to keep it really simple and easy. So, the reason I say I like the idea of a NAS breakout is because look at this chart. It looks exceptional, right? NAS, if you give me this chart, you say, look, inflation is cooling and growth is growing and jobs data is relatively strong, I would return a response that says, that should be NAS at all-time highs. That justifies, in my opinion, the NASDAQ continuing higher. You might say, well, earnings are so expensive. The stock market is so expensive right now on a price to earnings basis. Well, yes, but with this kind of growth, earnings should be, rising and aggressive and killing it, right? So just something to think about. We also have a little bit of a cool off in the treasury yields, right? Lee in the chat, you asked about the 10-year to that chart. Right now, we're just tracking the 2-year. And honestly, the 2-year is very close to kind of like the Fed's outlook. So the 2-year is actually below its 8-day moving average. We take that as a positive thing for equities, right? Especially valuations. You want to talk about freaking out about valuations. We want to see that 10-year and that 2-year. We want yields to come down in general. Nick will be very good if you add previous release data in that section. Please don't spam my chat, youngest billionaire. I appreciate your recommendation, but you spamming the chat kind of kills it for everybody else. What are your thoughts on pound dollar? Pound dollar, same as euro dollar. Economic data just favors heavily the dollar at this time, so I'm not really interested in buying the pound or the euro. Somebody asked me what's the highest reading you've seen on the Edgefinder. I think the highest I've ever seen was a 18 in one direction. I can't remember what. I think it was a currency pair and it was a bearish reading, but I don't remember what it was. So yeah, we'll see. We will see with some of these readings, these are just incredibly strong. And that does not mean like, oh, right now they're going to rip higher or crash. It just means that most things are pointing on the Edgefinder's screener towards a bearish or a bullish bias. This is my everyday ritual. Pull up the Edgefinder, look for setups based on the scores. I'm then looking for technical breakdowns or technical entries and managing risk. So, the Edgefinder is the engine behind the whole system. By the way, if you're interested in getting the Edge Finder, let's just go ahead and do this. If you're interested in picking up a copy of the Edge Finder for yourself, send us a direct message on our website. We'll drop the link here in the chat. You get a nice discount on the Edge Finder if you send us a DM right now. You can also get access. Today's the last day. If you're also interested in getting a membership with us, you can sign up and get access to all of the trades being shared by myself and the rest of our team here at A1 Trading. If you want to get our trading signals, they are real trades, real live brokerages, no nonsense on track recorded accounts. Come join us inside of the group. We have that available just until the end of the day, and then that discount is ending. So don't miss it. If you've been thinking about getting into the VIP room, getting a copy of the Edge Finder, you can bundle it. All that stuff is discounted until the end of the day. Actually, there is a way. If you're somebody who wants the VIP, somebody mentioned earlier wanting to bundle the two, you can get both right now for 35% off bundled. If that is something that you're interested in doing, our New Year's sale is ending on the VIP memberships. Send us a DM. We just dropped that link in the chat. There's your last chance and last call here on that event. Again, it is a major amount of savings. If you've been on the sidelines wanting these tools, wanting these memberships, I'm telling you, now's your chance to get into it. And I show you that, a lot of people have a lot of issues. They're like, oh my gosh, Nick, you sell a signal service. How dare you? And the thing is, I trade every day and I share, my ups and my downs, my real entries on my personal live brokerage account all the time. I'm not here selling a dream. This stuff is hard. But if it would benefit you to be able to look through the trades being shared by myself and my team, the cool thing here is that every trade being shared, I'll show you just an example really quick. When we're taking a trade idea, right, it's coming with full analysis. This is pretty much my trading journal, right? My trading journal is in here and shared fully, completely, why I'm taking entries, why I'm updating a trade, why I'm moving a stop loss. Everything gets updated in depth. It's not a, copy my trades and make millions. Like, I'm not here selling that whatsoever. But if you're serious about trading and you would like to see the trades that I am taking with breakdowns, explanations, analysis, it is a very worthy service. And I know the difference. Trust me, I have been on the, side of like, oh, I want to join some guru signal service and they pitched me this idea that's going to be easy money. I know what that feels like. That is not what we offer. We offer a genuine service where you can basically trade in a live room with us and see what we're actually trading ourselves. And more important, why. Gold, let's see. Gold still very impressive here, guys. Gold is actually tapping up against the 2,700. I'll tell you right now, I really don't like gold at this level. I'm not right now. Again, it's hard for me. I'm going to really reference my favorite new chart. It is really hard for me to love gold with this. Like, so you might say, well, Nick, inflation is where's my inflation? My inflation's up here. Nick, inflation's cooling. That's good for gold. And yes, I would say, yeah, that is. But even if that is a bullish thing for gold, I'm more partial to stocks and indices right now because look, this growth is not necessarily good for gold, but it's great for stocks, right? Strong PMIs, retail sales was, I guess, a little bit of a mess. This will turn red here in a few minutes. But most things are pointing towards U.S. economic growth. And that growth is not necessarily positive for gold, but it's positive for stocks. So for me personally, I'm thinking, why would I trade gold long when I could go look at stocks, right? I like the stock story a lot more. How much is it to join the trading signals? Jacob, if you would like more information, we have different options on our website. Go to a1trading.com/VIP, a1trading.com/VIP, or we'll drop the link here in the chat once more to where you can speak directly to our support team and they can give you all the discounted 35% off memberships, whatever, stuff like that. So if you're interested in that, we'll drop the link here in the chat again for you to check out. That link should be there in just a sec. It's also in the description down below. There it is. Okay, guys, real quick, we're going to take a break. And then up next, we have got our Technical Thursdays session. We do this every week with Miko and Marco. Can't wait to jump into some technical charts with them. So stick around. We'll be right back after we thank our sponsor, and then we'll back up to this quick break.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
All right, and we're back with Miko, Marco. What's up, guys? Welcome back to the show.
Hello.
Hello.
Happy Thursday. Good to have you guys back. We do this every week for listeners. Miko, Marco, myself, we take a look at some technical charts. We usually go a little bit of a rapid fire through a lot of different charts here. So easiest way to start this is usually just to ask you guys what you're looking at first and foremost. So Marco, what's your chart of the day? What are you watching here today?
So for me today, I was pretty much paying attention to the JPY pairs or the euro and the Japanese yen yesterday. And today I'm looking to see if it will continue down. So I'm just focusing on the 1 hour and this downtrend. I did have a little bit of a little flag entry here to sell, which unfortunately didn't fit the plan just because of this large wick. Then we did continue dropping down, but now we are getting another large wick, which is a warning sign. And I want to see another drop to the downside like this. So the overall story, I do believe, is still people are still a bit on the sidelines because of January 20th, right? I think that is the date when Trump is coming into office. So maybe some people are still waiting it out, seeing which policies he will implement on day one. So for most of the other pairs, euro, US dollar is kind of flat right here. We did have the inflation rate. So I believe this was CPI. And after that, we just kind of messed around. So yeah, EJ trending down. I'm looking for sell setups. Aussie US dollar is a bit flat here as well after we had CPI. AJ is sort of not moving anywhere. Pound US dollar is also pretty flat, and New Zealand JPY is the only one that I'm potentially looking for some sell setups on as well. Because overall, I'm focusing on this part and seeing a downtrend, and I'm seeing this nice leg, a little bit of a continuation. But yeah, nothing looks that clean for me to be really interested. So being more patient. And as I said, we do have Trump coming into office, and the Fed conference is, I believe, on the 27th of January. So we will see what will happen with that. Will it be dovish, hawkish? And I'm guessing that Powell wants to see which policies Trump will implement as well. Because if there's a lot of tariffs and stuff like that, well, then he will need to readjust the interest rates to follow those tariffs. So we're still on the edge a little bit.
Yeah, no, I mean, you broke that down really well. That is very much what's happening is, the markets are kind of sitting in angst, wondering what's coming from Trump and how will, the bond market respond and the stock market respond, because there's many different directions and we could go down that path I'll just give a brief highlight. If Trump takes more of a direction where they're like, we need to be massive government efficiency and there's tons of layoffs and there's more systematic changes to try and reform stuff, the stock market and the market in general is not going to love that. If that is their focus, from a humanitarian standpoint, maybe you agree with that, maybe you disagree with that. But the point is, we're talking about markets here. Markets won't love that. What the markets would love is if there's heavy emphasis right out the gate, talking about, we need to get way more lenient on restrictions towards regulations, companies, monopolies, like all those things. If they let off the brakes and just said, you guys go crazy, we just want to grow like a weed for this economy, then stocks and the economy would absolutely rip. And, here's the thing, whether you like Trump or dislike Trump, the one thing about him is he uses the stock market as his personal scorecard. That's why I kind of see there's a limit to how much he'll do if it is something that's negative for the stock market. And there's a lot that he'll do if he knows it's good for the stock market. That's my opinion on the matter. It doesn't really matter though, because at the end of the day, in a couple days, we'll see a lot of their directive, their kind of first and foremost decision making. That being said, I kind of cut ahead of Miko because I want to ask you, Miko, and also let me take a guess. Do you like yen pullbacks? Maybe I'm feeling dollar yen, pound yen as bullish setups. That's my guess. What are you looking at, Miko?
But wait, wait, say that again. Bullish setups on pound yen.
I was thinking that's my guess. You would say I'm trying to see if you like any of the yen crosses long, because I just remember last time, but we've had a little bit of a pullback here recently. Is this more of a reversal or a pullback to you?
I'm actually still looking to short the yen pair, so I'm still looking at
so gotcha.
yeah, I'm still looking at downside. So I was actually looking to short pound yen on the pullback, but it didn't pull back enough, and euro yen I missed it. It happened overnight. I'm actually looking at more downside. I'm looking to follow that momentum back to these lows here. So I'm pretty bearish on most of the yen pairs, maybe bar dollar yen. USD still pretty strong, and that one's still kind of trending up. So dollar yen actually looks like a decent buy. But pound yen for
I think
now,
that's what I was remembering is last time we were discussing it. You're talking about dollar yen's like impressively holding up despite the rest of them kind of plummeting.
Yeah, exactly. That. Like pound yen and euro yen, they're actually looking pretty bearish. But dollar yen actually still looks pretty bullish. So me kind of just focusing on the charts and the technicals, this is actually a market which I like to buy. So I'm actually very much looking for the pullback of this move here and looking for entries in this area. So dollar yen's actually a bullish setup for me, whereas pound yen and euro yen actually pretty bearish, which is kind of out of sync a little bit, but I'm going to see how the markets reacts. Maybe dollar yen just keeps falling, it doesn't react, or maybe pound yen and euro yen turn bullish. But for now, 154 is still in the area I'm looking at. We're not too far away, so I'm keeping a close eye on that. But yeah, dollar yen I'm bullish. I'm actually pretty bearish in euro and pound yen.
Here's a question for you, Miko. Is there a universe in which you have both consecutively on, like where you're long dollar yen and short pound yen? Is that possible within your trading rules? Can you have both simultaneously going at the same time?
Yeah, I mean, let's say if dollar yen gives me a signal here, I'll take the trade, and then I'll still have the bearish bias on pound yen as long as my requirements are met. But I would only enter that position once I'm risk free on dollar yen. So it's kind of, even if it was the same direction, my kind of thinking is if I'm in a position and I can move risk in terms of my stop loss to break even, that position is now kind of void sort. So I'm free to enter another position. I know, of course, with the correlation, if something happens to the yen, they're both at risk technically. But because now I've kind of limited it, I'm happy to get into another position, especially with swing trading.
In some ways, you've kind of hedged out your yen exposure, right? So very interesting. Yeah, I was just curious about that. Yen pairs definitely very interesting. I have not admittedly kept up with everything on that side fundamentally, but I believe that there was rumors of a possible hike. I'm not sure if there's further development on that. I'm pretty sure it's pretty close to now or has already happened, the Bank of Japan stuff. But let me just double check because I want to make sure I don't know when it's happening. Someone in the chat, find that out for us. I'm pretty sure there's like a Bank of Japan thing this week. They were discussing possible rate hikes, which would make the yen very strong. I think that's part of the reason why yen is strong right now. So we'll see. But that has a lot to potentially move the markets. I want to also talk about the dollar here, guys, because this has been a really interesting week for the dollar. Dollar had a lot of news, a lot of inflation numbers, PPI numbers, CPI numbers. And despite those numbers being arguably on paper supposedly weak for the dollar, we still see the dollar holding up pretty well. Marco, what are your thoughts on you talked to euro dollar earlier, but just generally on the dollar, do you feel like the dollar has more upside from here? Is the trend still intact, or is momentum fading on this one?
Yeah, so for the DXY, we are still trucking to the upside. Now, I did take a look at the last Fed press conference, and it ended pretty hawkish. So we had like a gain in the dollar, which followed the conference, and that looks to still be going on. Also, like the dot plot, the projections of the interest rate that the Fed does every other meeting were pretty hawkish as well. So I think that had a part to play. It's going to be interesting in 2025 because just fundamentally, Trump is going to want to keep the rates low. So he's going to want to have the Fed be more dovish, which is negative for the US dollar. And he's probably going to put some pressure on Powell like he did in his last term in 2018, I think it was. Technicals, this looks pretty bullish still to me. I'm not seeing any large bearish candles. The big level would be here on the top, but we still have quite a few ways to go. Some of these highs were pretty much crushed with a lot of bullish pressure. So yeah, the technicals, I would say, are pretty bullish. The fundamentals are still pretty bullish in my opinion because of the Fed. But for 2025 overall, I would give a bearish reading because of Trump and the pressure that he will put on the interest rate being lower.
Yeah, no, I mean, back in the previous Trump administration, the dollar definitely saw a lot of weakness. And again, the other thing, we had a discussion just briefly yesterday about how the dollar being higher, so much stronger, definitely weighs a lot on, people who buy U.S. goods. I mean, that is a serious thing. There's also that component. That's why Trump doesn't love the idea of a super strong dollar. Really solid, strong dollar sounds good in theory, but it can also hurt exports from the United States and make them more expensive for people outside. So something to think about too. Miko, what are your thoughts? Technicals look okay for the dollar? Or the dollar, is this forming some topping signals? What are your thoughts?
I'm still pretty bullish. I'm looking at the main levels here for dollar, and Marco pointed one out all the way up here around 113, 114. And the one below, which you just snapped, is this area here, around 107. So the way I'm looking at the dollar right now in the higher time frames is we've been ranging for the past couple of years. It looks like we've finally broken to the upside. And if we keep up this momentum, I would expect us to get to that high over there. If we come crashing back down, the only way I would become bearish on the higher time frames is if we close back below this. Then that would give me a fake out signal, and after that, I would expect us to see a full swing back to the low of the range. That's the only way I would kind of expect more downside long term. But for now, since the breakout is looking pretty healthy, I'm still very bullish. I have to say there are some signs that we are slowing down. We're becoming a bit more corrective. So I'm expecting dollar to go through a little bit of a pullback at some point. But as long as we don't break underneath, I do think the bigger move is still to the upside. So longer term, still bullish, maybe a bit of a pullback. Would you?
Yeah, and I got to say too, with some of the data here that came out this week, I would have expected the dollar to have a little bit more of a slide, but holding up really well. Just showing the technicals, the demand for DXY is very, very strong out there right now. So we'll have to continue to watch that, see if that trend line kind of can continue to hold, if that momentum continues, or if we fizzle out. But right now, I would generally agree with you guys. Looks more likely to continue than to reverse, at least until we get something that changes that. What about the metals? We've got gold up 0.7%. This one, again, very confusing for me. But, what are you guys' thoughts? Marco, gold up here, 27.15. Is this another attempt at this level where we just see a big sell-off? Like, how confident are you in the idea of a breakout here on gold? Or do you feel more likely that this is just stuck in a range?
Well, we have been talking about how the dollar is gaining value and the gold is just staying there, meaning it's not losing value against the dollar, which is pretty bullish overall. I do have these highs as a big concern. So my technical analysis would tell me that we are still ranging around in this overall sort of a bit of a flat range. I would need to see a big breakout of the upper level. We are approaching it, so maybe tomorrow or in the next week we can have a breakout. Until that happens, I cannot give a definite answer of if I'm bullish or bearish, because overall I do think we're still a bit flat in this area. Again, if you look at some correlations, you could say, well, gold is overall bullish because it's holding up so well against the dollar, meaning if the dollar starts losing strength, gold may start flying like crazy. But just focusing on the chart, I would need to see a big blue candle that breaks out of these highs, and then I would be pretty bullish on this one. Until that happens, I'm neutral.
Yeah, and again, really big level for a lot of gold traders watching this level currently, right around this 27.15. We'll see if that can break. That would be a good start, I guess, if you're looking for, fresh highs on the all-time high price of gold, things like that. For us to get there, we got to see some decisive closure above this range, at least in my view. Mika, what about you? Do you think gold? I know you've also been watching silver a lot. Either metal, what are your thoughts on the metals right now?
Yeah, things are looking pretty bullish, I must say. We are approaching that big level at 27.20, and I'm looking to see if price can break it. I'm very bullish on gold. Again, looking at the high time frames, looking at the technicals, this is still a very confident trend. I know we had that kind of sell off um, late last year, but overall the trend looks very, very bullish to me in the weekly chart. So I'm just trying to see if I can take a piece of that cake really, and a break of that resistance. 27.20 will look really good, and next big level will be back at the all-time high, 27.90 roughly. So very bullish on gold. Yes, we could turn around here very easily, but I'm not really interested in that move. I'm more interested in price breaking the highs and looking for opportunities on the back of that. So yeah, very bullish on gold and silver. It looks like we're getting to that as well. This double bottom looks like it's formed pretty well, and now we're forming some bullish structure, some higher highs and higher lows. So again, more of a sign that silver's starting to follow, because silver hasn't actually really been that bullish. It looks like it's starting to step into that a little bit. And what I'm looking for silver as well is the impulse here. This is the correction, another impulse back into the highs. So if silver on the 4-hour chart can start forming some higher lows and some higher highs, which it's doing, I will be looking for pullbacks, and hopefully if we can see a bit more upside, I will start look for some breaking retests of these highs, and again looking for the next high low. So yeah, very bullish on both of them, and I do think some buying opportunities could be forming pretty soon.
Yeah, no, I like it. And again, the variation in gold and silver is actually interesting. Silver has not held up nearly as well as gold. But if you do truly start to see that breakout in gold, you start seeing momentum form for the metals. What's interesting is a lot of times what happens is, like in 2024, which was a great year for silver, silver actually lagged behind gold. But then once the metals started kind of rallying, silver kind of picked up and actually accelerated more so than gold. So always interesting to keep an eye on both, especially if you consider yourself, I know a lot of our listeners are very heavy on trading metals. Take a look at silver. Even if you don't trade it, just keep it on your watch list. It's always interesting to see how, usually if silver looks really strong, metals are truly making a strong move. If silver looks, kind of ranged or downtrending, metals are usually not moving as clearly as cleanly. So, we'll have to see. Also, big week for stocks this week. I'm curious what you guys' thoughts are just on indices, Marco, S&P 500, NASDAQ. Are these things, they've not had the same kinds of clear, clean uptrends recently, but are these just consolidating? How do you feel about them?
So in my personal opinion, again, we come to the fact that the stock market is highly dependent on what Trump will do on day one and some of the policies. So I do think we're pausing a little bit. We're looking a little bit flat right here. It looked pretty bearish, but now we are recovering. Overall, just by looking at the technicals on the daily chart, I'm super bullish on the S&P 500. I just think this is sort of like a channel. And in my back testing, I have seen the S&P 500 just move up in these channel-like formations. So this may just be a tap of a trend line until we crush to the upside. But yeah, we do have a couple of days more in my forecast of just this flat price action until we get some more news on what the president thinks. In terms of the NASDAQ, which of course is going to pretty much follow the S&P 500, I have the same analysis. My technical analysis is telling me we're in this ascending channel. This is clearly how indices move, and the probabilities are for this to continue going to the upside. So I'm pretty bullish on the indices. And so coming back to like Trump coming into office, how would you stay on top of the news? Let's say, so do you guys in the US read, let's say, I don't know, the Wall Street Journal, or is Twitter a better thing because of Trump being very active on there?
Twitter's pretty good. I also listen to a lot of financial television, which is, just for me, it's like part of the job. I just listen to it all the time to try and stay up to date with what's happening. But when it comes to the Trump stuff, it will be pretty obvious on social media. That's maybe the easiest way, is just follow some pages that are reporting on stuff. CNBC is an easy one. On Instagram, Twitter, just keeping up with it. Of course, you don't want to go down the mindless, headline news all the time stuff, and there is certainly is that. But for the major stuff, the major changes, it will be interesting to see. Again, I really think it comes down to, is he going to be more focused on systematic reform, or is he going to be more focused on, pumping the economy? We'll have to see. But it's going to be an interesting couple weeks, and regardless of whether or not you're looking at the macro, the fundamentals, or just the technicals, all of it is likely to be interesting in coming weeks. We have plenty of volatility to come on that front. Same question to you, Miko. Indices, are you watching them? If you were to look at them, which one is your favorite currently?
So I would probably say US 30 looks pretty interesting. I like it because it's got a lot of room to the upside if it's going to continue. But all of them, US 30, NAS, S&P did very similar things this week, of course, with the bullish move. But they all kind of came back to really strong support, and they all kind of just faked it a little bit, like dipped below and then had a really big run. You can see the same thing with NAS as well. Nice little push through the support level. And again, a really strong move to the upside. S&P, same thing as well, and a very strong push. But they're all kind of coming into resistance, like trendline resistance. You can see the prior low highs here as well on the S&P. I'd watch out for that. I don't think this is necessarily the best time to be looking to buy them, unless you're looking at much longer term scale. If anything, there might be some short-term downside. I think this is some really healthy support. Should we come back here, this could be the place for some longs. And I like S&P US 30 because there's a lot of room back to the high. So should price manage to break through some resistance here, I do think it could possibly be a nice trend that forms on the 4-hour or the hourly chart, which could be a pretty decent return on risk there in terms of risk to reward. So I think in general, they're all looking pretty bullish looking at the higher time frames, but a lot of them are kind of coming into resistance, especially NAS 100 as well. I'd watch out for that descending trend line there as well. But if you can break through that, then that would be a big signal that, we're probably going to push to the highs.
Yep. Consolidating with some, again, big key changes coming our way in just a few days. So we'll have to see how that all shapes up. Last one of the day, Bitcoin. Marco, is Bitcoin impressing you? I mean, it's impressing me recently. Geez, 89,000 up to where we are, 98,000 in like 2 days. Like, what a crazy mover Bitcoin just is. What are your thoughts on crypto?
Yeah, I think we touched 100K yesterday again. So we're hovering around that level. Bitcoin is looking much better than Ethereum. Ethereum looks to be, just a quick glance, looks to be falling apart. But that is usually how it goes. Bitcoin tends to be a bit more stable than Ethereum. And yeah, this was yesterday's close, super bullish, closed at 100K, 343. Now a bit of a retrace, but overall I do have my levels, which would be this box right here, and of course the major high on the top. So I do expect a bit more range-bound market. We talked about, again, new president, new policies. He was pretty bullish on crypto. People want to see what he will actually do when he comes into office. So maybe a lot of investors are on the sidelines when it comes to crypto as well. And we talked about how Bitcoin can follow the NASDAQ. So if we take a look at the NASDAQ, NASDAQ is pretty much pausing a little bit as well. So I would say these two charts are pretty similar in the last few days. And I do like that we're hovering around the 100K mark. We're kind of testing out the new price. And if it comes out, if we get some bullish news, we could easily crush the major high and just continue ripping higher. Right now, I would say I'm more leaning towards bullish than bearish, because if we did get a drop, I do believe it would have already happened in this area. So I'm leaning more bullish, but I need this high to be broken, right? And Ethereum is just looks absolutely awful, to be honest. So Bitcoin is the main focus when it comes to crypto.
Yeah, the divergence is kind of interesting with some of the cryptos. I mean, it is the altcoin season. Is it here or is it not? I can never tell.
Mhm.
You know, it's so fickle. It's like it's here one day and then the next day it's completely not. And then meanwhile, you know, the reason I just like sticking to Bitcoin from a trader's perspective is I feel like it is that somehow it's the more in between one. I mean, this is an incredibly volatile instrument, but it feels like expectedly volatile. Like altcoins are just like so sporadically volatile. Like they'll just be so violently up and then down like so much. And Bitcoin, I feel like, just kind of is the more stable kind of anchored one of the list. Anyways, that's just from trading perspective. I prefer it over the rest of them. Not to say, you know, any of the rest of them are necessarily bad or anything. I think Ethereum is pretty cool, but Bitcoin is just the one that I think even the boomers know what Bitcoin is. You know, it's like really, really straightforward, easy one to look at. Miko, same question to you. How's Bitcoin looking on your charts?
Yeah, similar kind of outlook to Marco. We're still holding support pretty well, actually. We haven't really gone anywhere, which is not great, because there's one thing to hold support and there's a second thing to actually move away from it. We're still bouncing at that, but I have to admit, I like that candle close on, what was that, Monday? Really nice wick. It was looking like price was breaking through at one point, and I came back to the charts and saw big candles. I was pretty shocked at that. And yeah, I do think as long as this level holds, we are likely to push back to 100K. Just momentum needs to pick up, because let's say we do push to 108K. Let's say we do push, then it's still very, you know, like not really seeing much momentum. We probably might see new highs, but then come back down again. So we're back in the same situation we once were in. So I need momentum to come from somewhere. If not, if it does break, then I'm looking at 73K there. But in general, I'm still pretty bullish, and I do think we can get back to the highs.
Yeah, I mean it's a nice start here. I gotta say, I am in a really good position right now for Bitcoin. However, I had a loss before this, so I always I can't just pat myself on the back for my wins. I actually got stopped out within that candle, but decided pretty quickly when it started ripping off of it on the lower time frames. I was like, oh, you know what? I think this is going to actually rebound at support, and I don't think we confidently broke that level. So I pretty quickly jumped back into my Bitcoin position. I've got a stop loss below that wick low from that day, but I too loved the way that candle closed. And then we saw the nice follow through on CPI and PPI data. So I'd love to see Bitcoin, see if we can break back above the 100s a little bit more confidently. I personally don't think that 108 was the high of the year. I think there's a good chance my for fun target on Bitcoin for the end of the year is 125K. We'll see if it happens. But I think that generally we're in an environment that is pretty hospitable to Bitcoin. As Marco was mentioning, the Trump administration seems pretty favorable towards it. But then also you've got just generally a lot of, you know, I've been showing off this fun chart I've been working on. This is US economic data in a heat map form. A lot of it is looking really strong right now. Inflation's cooling, jobs data is pretty strong, US growth. So that environment, right? Even if you're, a lot of people like to think like, oh, Bitcoin trades very little on the macro, on the fundamentals, but it actually trades incredibly close to it because it's watching risk appetite. If people are feeling a little bit more money in their pockets, they'll go buy some Bitcoin. We talked about that, I think, last week. People our age will, you know, drop a little bit of money on Bitcoin before they'll drop a lot of money on you know, other things. So it's a consumer play in some ways, in my opinion. The way the economy is feeling is really important to Bitcoin, and my outlook on the economy is still good. So I'm going to stay with the Bitcoin idea as well. So it complements the technical basis as well. I mean, I think we all drew this level of support. I did admittedly get faked out from that wick there, but decided to re-enter pretty quickly. So we'll see how it plays out. But Bitcoin to me looks good, and it sounds like we're all kind of on the same page. It's a lot better to talk about Bitcoin now than it was back here when we were just in this perpetual range market for, you know, 6 months. But we stuck it out. We still kept talking about it on the stream, even though it was incredibly boring. So, you know, maybe that patience paid out.
And you're still with the correlation with the NASDAQ, right?
Yes, yes, still very, very high correlation there. I mean, the Nasdaq had a couple good days, and lo and behold, Bitcoin has an incredible couple days. So they typically move together. It is very, very closely correlated. But again, what I like, and I said this the other day, one thing that's positive about Bitcoin is that if you're somebody who likes to trade with, like, leverage trading is expensive, like borrowing money, margin accounts, CFD brokerages, like there's expense there. Bitcoin is cool because I can trade something like IBIT, which is an ETF, or you can do Bitcoin futures. There's ways to access Bitcoin without actually using margin or leverage, and that's way more cost efficient. Instead of buying the Nasdaq, if you're very bullish on the Nasdaq, instead of paying for leverage, you can just buy Bitcoin, for example. And this is not financial advice, it's just what I do. If I'm very bullish and I want a little bit of extra juice to my trade, I can go for Bitcoin, which doesn't cost me any margin. It's just way more volatile. So there's like little nuances that make Bitcoin cool for index traders as well. At least, if you're like me and you genuinely or generally think that it has potential for the future. There's also tail end risk. Like, for example, if Bitcoin just gets shut off massively somehow, that correlation to the Nasdaq will break down in a really negative way. So, there's all sorts of little nuances there. But guys, we've run out of time. I want to thank you both for coming on the stream today. Before we let you go, let me just mention to everybody who enjoyed this segment, guys, do us a big favor. Make sure to go subscribe to Miko and to Marco on their own YouTube channels and social medias, respectively. A big way we continue to bring value to our audience here is by bringing on talented people who have experience in the industry, who have content, hubs of their own. And the best way we can continue to have them on is to support them in their own content. So do us a big favor. Go subscribe to Miko. Go subscribe to Marco. Go find them on their socials. Let them know you're watching them on the show, and show them some support, guys. Miko, Marco, thank you guys very much for coming on today.
Thank you. See you next week.
See you next week. All right, guys. And up next, we've got our next show host, Forex James, taking over to talk a little bit of currencies. You guys know him as the Euro Dollar Pro. He loves his Euro Dollar. So if you're a currency person, stick around for a few minutes. Of course, he talks a little bit of everything, but definitely for the currency traders, stick around. And up next, we got Forex James right after this quick break.
Trading is hard, but trading by yourself is even harder. This year is your year to join a trading community. The A1 Trading VIP Discord community is made up of thousands of traders around the world committed to helping you learn and to find better trade setups. Inside of the Discord, you can browse Trader Nick, Frank, and Ivan's trades on all things Forex, stocks, options, and ETFs. You also get exclusive access to Ivan's live coaching webinars, where you can learn from a seasoned professional in the industry and even ask questions during the webinar. We also have chat rooms filled with traders who share their thoughts and analysis daily. It's a space for both veteran and new traders alike to come together over their love of markets. Want to take it a step further? Upgrade to Pulver Alerts, where veteran money manager Chris Pulver shares his daily options and stock positions. All things A1 trading are happening in the VIP Discord. Start your new year off on the right foot and join today.
Hello. How is everyone doing? Hope you're all having a great end to the week. Actually, we're almost done. Pretty slow in terms of news. We did have some US dollar labor market news, but nothing really groundbreaking. Not good for the labor market, but it wasn't detrimental either. We did have unemployment claims slowly tick to the upside, or slightly tick to the upside. Retail sales slightly ticked down. So yeah, nothing too major in terms of US data. We did also have GDP this morning for the UK with a slight tick to the upside. It was only month on month, came up to 0.1%. Forecast was 0.2. I did discuss this actually on my Twitter, so it wasn't anything too crazy. Investors weren't very happy with that number as it didn't meet what they wanted, but it was still a slight move in the right direction. So the pound has a little bit more optimism around it in my view at the moment. And there's a lot of you guys. Bernard, hello. Akko, Bashi, Lee, Marcus, Tom. Hello, guys. Good to see you all. So, yeah, not much going on my part of trading. I'm still in euro dollar shorts here. The entries have been really good, actually. I was talking about this earlier today. So the two initial entries were a little bit weak, but the entry here was, we still did have drawdown, so you could argue they're not good entries. But as far as I'm concerned, in terms of actually getting sort of a overbought situation, pretty accurate in terms of the pullback. So my final entry was right here after we had CPI yesterday, slowly moving to the downside now, looking to take around 13% gain on this trade if we can continue down and take profits. Still in euro pound shorts as well, looking to take around 5 to 10% profits on this one. So looking quite good to end the first month of the year if these trades can sort of run down into my targets. That would be lovely. Amanjot, hello. Cool, good stuff. What's your thoughts on dollar Swiss? There is resistance on weekly time frame. Yeah, I'm in dollar Swiss actually here. So this is my position on dollar Swiss. So yeah, it looks fine to me, actually. I do know what you mean regarding the weekly resistance. It does look a little bit scary. However, the dollar is continuing to dominate. There was a headline this morning, actually, basically saying the dollar exceptionalism is starting to become a problem. So the gist is the US has been using fiscal and monetary policies to stimulate the economy. This has led to a strong US dollar, which in turn affects currencies across the world. For nations with high levels of dollar-denominated debt, a strong dollar can increase debt burdens. Moreover, the strength of the dollar can also impact global trade as it makes the US goods more expensive to purchase for those using weaker currencies, potentially leading to trade imbalances. As the world's reserve currency, major movements in the dollar can have wide-ranging impacts globally. So this is a little bit of a concern. However, it's not something I'm going to really start exiting the dollar from just yet. So immediately I'm thinking that we are going to break this level of resistance. There's not really any fundamental factors that would make me doubt this. We've broken above this weekly 200 moving average. Failed to really close or move below the previous weekly candle, showing buy-side rejections here or sell-side rejections. And this was mainly, again, due to CPI with some dollar weakness. So yeah, I'm more than happy to stay in dollar Swiss longs at the moment. Again, dollar domination is continuing. No reason to really doubt it at the moment. My euro pound target is kind of non-existent. So I'm kind of, to be quite honest with you, looking to get out as soon as I can. This drawdown's a little bit vicious. I did kind of over risk on this one. I wasn't expecting such a large move to the upside. But, it's one of those things. It's nothing that I can't handle. So realistically, I would like to get out just below my sort of break even or average price, which is at 0.835. So I'm looking to exit really at these previous highs down at 0.83575. If possible, if we can start seeing a move down there, that would be great. But at the moment, there's nothing to do. The pound is relatively stagnant. So if we go ahead and have a look at the gilts, we can see we can tell there is some investor confidence coming back, although we've not really changed trend. I mean, gilts and technicals don't really go together at all, but still, if we look at it from a technical aspect, we are still within this sort of trend to the upside. However, after the inflation yesterday, we spoke about this on yesterday's stream, but I'll quickly recap it for anyone that wasn't watching. UK inflation came out cool yesterday for the UK, and this is a great example of rate cuts actually being beneficial for the currency and not a bearish or a dovish factor. So with the gilts, this is essentially what the UK is paying on their debts. So if we look, this level hasn't been reached since back in 2008 during the Great Financial Crash or the GFC. So it is significant. These gilts rising is not a good thing for the UK to have. So that is basically forcing more rate cuts than what was initially in the pipeline for the Bank of England, which is beneficial to bring down these gilts. So the UK's debt problem isn't quite as significant because as you guys should know, the UK economy is really struggling at the moment. Welcome aboard, James. Greetings from Uganda. Well, hello from the UK, Godfrey. Would you recommend shorts on dollar yen? I would recommend nothing. I can't recommend anything, unfortunately. However, with dollar yen, what we're looking at really is 160, or what I'm looking at is 160 to 165. So we know, or I know already, that there's a very select few number of institutions that already have sell limits at 160 on the dot. I'm not really willing to do this yet because I'm looking at the range of 160 to 165, and this will be the range that I'm looking to catch the Ministry of Finance intervention, so the MOF. And the reason it's 160 is just because that's what it is. That's just the major level that everyone's decided, or the Ministry of Finance has decided that's the level of danger. So we've got the intervention. What we also have is rate hikes by the Bank of Japan. That's pretty much expected. It won't be a shock, but it is a bullish factor for the yen. So that I assume is getting priced in now. But the other side of that, we do also have the dollar. The dollar is strengthening. It's coming up to 110. It's not quite there yet, but I do see 110 on the dollar getting hit by next week, possibly. So yeah, I'm not comfortable going short just yet. I'd be happy to go short at the previous highs on dollar yen. So this would be at 161.55. I would likely dollar cost average into this with very, very small positions. When I say very small, I mean really small positions, because I've been burnt before in the yen, so I'm not very comfortable going in too heavy. But yeah, I'd be looking at something along these lines here on dollar yen. Yes, euro pound is dollar cost averaged. Longs on NQ. Let's see. I'm not sure what time frame you're looking at, but yeah, we can have a see what's going on here. So we've been looking at the indices, specifically the US indices, for quite some time. So the past couple of weeks, or the past sort of week or two. I'm a little bit cautious of this downside move that we are sort of continuing to see. This channel is pretty aggressive, really. There's not really a trend line there, but still, I need to see a clean break to the upside, possible retest and continuation up. That would be the only real catalyst for me to start considering taking this trade, because otherwise it seems likely we might see some further downside if we do follow previous price movements. So yeah, NASDAQ is not, well, the US indices in general aren't really anything that I'm looking at too seriously at the moment. Anthony, hey James, can you recommend a website to read up more about UK economy? I'm looking to get more knowledge on GBP pairs. Not specifically one website. So for example, the UK stuff that I'm looking at, you can go onto the UK government website, you can look at their imports, you can look at their exports. So here we can see that they're importing more than they're exporting, telling us that they're relying primarily on foreign investment to survive, really. So it's generally looking at what drives currencies. You've got GDP, you've got the labor market, you've got imports, exports, so services. So yeah, unfortunately, I don't know one website specifically to look into it in super detail. You could look at, if you got the Edge Finder, you could go into the Edge Finder, look at the stats on there, and then go and Google those stats specifically. Mo, I'm good, thank you. How are you? So for everyone asking about the yen, I'm going to sound like I'm going to sound very boring here, but there is absolutely nothing for me to say. I've just covered basically everything on dollar yen. And all of the other yen pairs, in my view, are reliant on dollar yen. So again, 160 is the point. And I really do think we are going to get to 160. If we look at the dollar's trajectory, it's very clearly to the upside. The yen is very clear to the downside. Although we're having some short-term yen strength, it doesn't mean that's going to last. So I would suggest dollar yen's going up to 160 eventually. And then in between 160 and 165, I'm looking for a potential short. But until then, I have no interest in any of the yen pairs. The only other thing I guess I could add on to that is I wouldn't really want to go short on dollar yen itself. I would more be looking to go short on something like euro yen or New Zealand yen. And that's because the dollar, as I just said, is pretty strong. So I wouldn't want to go and short it. So then I'd go short on the yen by going short on a weaker currency. So it'd be again, the euro or the New Zealand. Pound dollar coming up, probably not. Well, maybe in the short term, but I wouldn't expect any trend change. It's actually going down. I wouldn't look for any type of bullish moves on euro dollar or pound dollar for now. Again, I'm starting to lose a little bit of my interest on dollar strength. Not really for any particular reason, more just because, well, if we look at dollar or at the dollar, it's been essentially a non-stop run since September. So it's been 3 months of nothing but strength. And again, as I mentioned earlier, a strong dollar, yes, it's good for traders, it's good for the markets and things, generally speaking. But there is a point where you don't want a super strong currency because it has ripple effects. As I already mentioned, it makes debts from other countries extremely difficult to pay off. It makes goods and services a lot more difficult to buy, again, for people or countries with weaker currencies. So there will become a point where I actually start looking to go short on the dollar. That won't come until we start getting data to actually back that up. But once I'm out of these euro dollar shorts I'm currently in, I'm going to just chill. I'm going to step back and kind of just wait for a while and see what happens. At least I might take some short-term trades, but at least until building a longer-term trade like I'm in now. So yeah, in terms of pound dollar itself, 1.2 is currently the target or the institutional target. And when I say institutional, I mean when I look at bank reports and look at the trades that they currently have open and what they're saying, 1.2 is the level. So just like 160 on dollar yen is kind of the target, 1.2 is also the target on the pound dollar. James, Bank of Japan have their rate policy decision on the 24th. So are you taking in advantage when you say a rate hike is priced in? Are you talking in advance? Oh, right. No. So we see it often when when the Fed is very clearly signaling they're going to hike or cut or hold. We see it get priced in almost instantly. Obviously not the actual price changes instantly. I mean, it starts getting priced in basically instantly. So that's why oftentimes a rate decision, so when we actually get told what the rate is, as long as it's on target, it's what people expect, we often don't see much movement. So for example, when we had the Fed cut, when they cut by 50 basis points, we actually didn't see very much movement at all. It was back down here. So this was when we saw the labor market in some serious trouble. We saw inflation. I think inflation was going up. I can't remember. I got rid of all my notes on here. But during this whole move down, because we had such a detrimental, or we saw such a detrimental labor market, and it was just sort of getting worse, really, it was becoming very, very expected that the Fed was going to cut. And then they did cut, and this was the price movement we got. And that's because it was priced in. People expected it. It wasn't a change. It wasn't a shock. And it's going to be a very similar thing for the yen, unless we don't see a rate hike or we see a huge rate hike, which I doubt. Then yeah, more than likely the rate decision itself will have very little effect. But it's yeah. So there's a little bit of word vomit there, but there you go. What's your opinion on gold? What websites do you use for fundamentals and news findings? Okay, I'll answer your second question first. So websites, I use lots of different websites actually. I use the Edge Finder for, so this is the Edge Finder if you don't know what it is. I use this to get basically an immediate bias. So I'll say, okay, I want to do this, or I'm looking at that. I'll check the Edge Finder. If it's not there, more than likely I'll get rid of the trade, or I'll stop looking at the trade. Because what this does, it gives me a very quick overview of what the conditions of that market are. However, if it's in line, so for example, dollar Swiss, I'm long dollar Swiss, euro dollar, I'm short euro dollar, pound, euro pound's not on here, but still, I use that. Then I'll likely do a deep dive. So I'll go and look at the data on third-party websites, and I'll sort of do a deeper dive. So you could use things like Bloomberg, Fred is great for getting data as well. There's loads of different ways. Just Google fundamental or currency data and things. You'll find loads of stuff. Trade and Economics is also a great website. They're all free. The Edge Finder's not, but the other ones I mentioned are free. And in terms of gold, gold for me doesn't really have anything worthwhile looking at. So we are stuck within this range. Granted, it is a large range, but there's just no real defined trend. We do have obviously upside movement here on the H4, but we don't have a clear long-term trend in my view. So I'm not looking to trade it. There's no fundamentals that drive me to buy or sell gold. There's no geopolitical situations. There's no escalating tensions. There's just nothing really for me to do on gold. Hello, James. Do you think Bitcoin and dollar will have reaction to Trump's inauguration? No. Babu, I think you asked me that on my stream this morning, but no, I don't think so. Again, it's priced in. There was uncertainty leading up to the election, which again was helping gold drive to the upside. But Trump won the election. We all know he's coming in on Monday. It's not, again, there's no shock. There's nothing really to do. Dollar CAD. Dollar CAD's interesting. So I'm actually just going to pull up the Edge Finder again. So the problem I have with dollar CAD is we're getting mixed signals, really. So the dollar, yes, is strong. I am looking to buy the dollar for now. The problem is oil is also a very bullish reading. It's currently at a score of 15, which is actually, we've got really extreme readings at the moment, actually. But yeah, oil is very bullish. So if oil is bullish, what does that mean for dollar CAD? Well, I'll tell you. I'm not going to wait for you to answer. Dollar CAD is now range bound because we've got dollar bulls, we've also got CAD bulls, and we've got oil bulls fighting, and it's just causing this market to move sideways. Because obviously, as you should know if you're trading the Canadian dollar, oil is a huge part of the price of the Canadian dollar. So when we have strong oil, we often have a strong Canadian dollar, and obviously vice versa, weak oil, weak Canadian dollar. So it's causing this just mess of buyers and sellers. There's no, I mean, obviously we are generally trending to the upside, but at the moment it's just sideways. So there's nothing for me to do here. Oil is currently ripping to the upside. So again, not really looking to short the Canadian dollar. So it makes me very neutral on dollar CAD. Sean, good to see you. Hello, my friend. How's the day trades? Yeah, fine. Euro dollar's doing fine. Although this has turned into more of a swing trade. Same thing with euro pound. But it is what it is. They're both fine. Euro dollar's actually in profit now. Euro pound is still struggling, but it is fine. Hi, James. What's your view on dollar yen? Marshad, we've already discussed the dollar yen. Feel free to rewind a little bit. Generally speaking, I am bearish, but I would just want to see some higher prices first towards 160 to 165. I caught gold at 2,600 for longs. Held till today, only bought technical wise. I think it may go all the way up to 2,800. Yeah, gold gold has been a bit of a moneymaker actually for a lot of people recently. I know quite a few people in my Discord have been buying gold as well. But yeah, just for the way I trade, I prioritize a fundamental direction, then I will go into the market on technicals. But at the moment, there's no fundamentals for me to then go into the technicals, if that makes sense. So I'm kind of just sat doing nothing. 2800 is a pretty optimistic target, but it's not out of the question. I think it's probably the more likely place it will go rather than to the downside. But yeah, again, there's just nothing that makes me confident enough to actually buy it. Not buying oil. I've already missed the move, unfortunately. Ceasefire was announced on Gaza, but still Israel attacked Gaza recently. Is that important news as people might buy gold for safe? No, the ceasefire on the ceasefire between Gaza and Israel, it's not really having any effect on the markets at all. I'm not sure about any news after that, though. That was the only headline I've seen regarding that. So if there's been an escalation since then yes, it could be contributing to the rising gold at the moment. Is 78 level oil great pullback or 75? It's tricky because there's not really any strong technicals here. You've got a couple of small levels. I suppose you've got this, but that's very low. I'm not sure really if price will come back to there, especially while maintaining this uptrend. Got a level here, and then I suppose you've got this level here as well. I would consider buying if we did come down to 75. If we didn't reach 75 and we ended up respecting and continuing off this previous support at 77.6, then I'll sit out. 75 is kind of the only level I might be interested. There's uncertainty surrounding the possible effects of Trump tariffs. Lee, that's actually a good point. I completely forgot about the tariffs. Kong, hello. It's good to see you again. Volstag, nope. I've got no clue what's going on. I keep getting messages or keep getting notifications from my ledger saying XRP's gone up 9%, XRP's gone up 5%, blah, blah, blah. So yeah, I know it's doing very well, but yeah, I don't really keep tabs on what's actually going on. Edgefinder, Bloomberg, Trading Economics. So if you just type in tradingeconomics.com, it's a free website where you can get very basic rundowns on what's driving currency pairs. I'll show you because, again, it's free. So if you go here, click on markets, you can go to currencies or commodities, whatever it is you trade. Let's go to euro dollar. And here it will give you a very brief breakdown on the market and sort of what's going on. So yeah, that one's quite good if you just need a quick sort of recap. Can we still sell euro dollar right now? Godfrey, it really depends what your strategy says. Can you sell it? I think the movement and the momentum is definitely to the downside, but what does your entry criteria and your rule set and your research say? So someone wants Swiss yen. This looks quite good, actually, for possible further downside. You'd need to have, well, in my case, the stop would really need to be here. There's nowhere else for it to go. So I just have it above the previous high on the H4. Take profit. I suppose you could have two. You could either go for a sort of a 1-to-1 and target down here, or you could go a little bit further, go for a 1-to-2, put your take profit down, sort of 165.8. So the reason I would more go towards short is, again, the yen is showing some bullish movement today. So, follow the trend, I guess. We've had the break, we've had the retest. So speaking just from technicals, downside does seem more likely here than any upside. You bought Euro Yen and Euro AUD. That's brave. I suppose if you were buying Euro Yen, now is probably the best time to do so. You do have quite a nice support through here. The yen strength, I don't really see that as being too continuous. The euro is very weak, though. So to be honest, it wouldn't be a surprise if we do see slightly higher, but followed by further downside. I wouldn't expect a change of trend here. Euro Australian as well. I don't mind it. I think the technicals look quite solid for further upside. Euro, however, I'm not really a fan of to the long side, but Australian dollar's also taking a huge hit with the Chinese, with the problems in China. So yeah, I think if I had to take a trade, it would be to the upside, just buying support. We've also seen rejection here off the 200 moving average. Take profit back at this previous high at 1.67892, but beyond that, I don't really see anything that's overwhelming. Hello once again, James. How's Dollar Swiss? Dollar Swiss, I think, is around entry, or it was last time I checked. Yeah, it's basically just sat at entry. There's nothing eventful going on here. So, yeah, kind of just sat flat, really. Should take a quick look at this. Euro dollar's not really doing too much at the moment, kind of just up and down, sideways. Just need to see, what will it be? A 50 pip move to the downside, and I can call it a day, take my 13% gain, and be done. Until then, can't really do much. Euro CAD also doesn't look too bad. I was looking at this one this morning. I'm not in it, but it's quite compelling, actually, with the oil prices we were just talking about. So if we're looking at strong oil, we can expect strong Canadian dollar. We've also got a weak euro. The H4 trend is to the downside. We've formed a resistance here. So yeah, it does look very strong. Take profit down at this previous low, so around 1.455 roughly. We've got a market gap as well. I'm not sure if this is broker specific or it's a what do you call it? A true market gap. I'm not 100% sure. I don't really care, to be honest, that much. But I think this trade idea is quite strong. But I can't really take it until I'm out of my current positions, because my portfolio is very heavy right now. How often do you do these types of streams? I'm live every day. So I'm live on this stream normally 2 or 3 times a week, but I'm live on my channel every day. Well, every weekday. So Monday to Friday. So maybe see you there. I'm just seeing if there's anything else going on. I don't think there is, to be honest. The market dynamics haven't changed really at all recently. The only sort of notable point would be the pound, but again, we've already discussed the pound in a bit of detail. The yen also has a lot of potential to the upside, but right now, nothing really to do with the yen. Bashy and Sean have got a bromance going on. New Zealand Swiss. Would expect New Zealand Swiss to be on the downside. Yeah, okay. So with the New Zealand dollar weakness that we're seeing off the back of China, it's not a surprise to see slightly lower prices here. The Swiss is stable. Actually, let me just check the central banks. Just give me 1 second. I want to see if there's a divergence or not. I can't remember what the Swiss National Bank is doing. Swiss National Bank is cutting Reserve Bank of New Zealand. So there's no central bank interest there at all, really. So yeah, I think following just the overall trend is very clearly to the downside. The New Zealand dollar, as I said, is pretty weak. The Swiss seems quite stable at the moment. So yeah, I think going short, possibly just this level of support, is quite a reasonable idea. I'm getting jealous. True. The target for euro dollar is parity. I've been calling parity for a while, but I'm not sure I really want to trade into parity. It wouldn't be out of the question if we saw a large amount of buying interest at that level. I doubt it would be sustained. I'm not saying we'll see a change of trend, but it wouldn't surprise me if we do see some buyers come in at that level, just for a bit of an aggressive pullback. And then we might start heading lower towards the 0.97. But of course, we need to take into account what the data is that's coming out of the US and Europe, or Eurozone. Bernard, I agree, this week has been pretty boring. Yeah, not much going on. Anyone watching Blue Suit Legend? They trade TQQQ and haven't lost. Nope, I've got no idea who that is. Yeah, it's been a very boring week though. Very, very little to do. It's just been a case of scaling into trades on my part, really. So yeah, let's just go back to euro dollar here. We'll go into the daily, actually. So yeah, I would expect likely downside, and then we'll come into this level. The reason this level specifically is because we've got previous structure sort of around here. So within sort of 1.00827 to parity, which is just 1.0 flat, I would be expecting some sort of bullish movement. Now, again, maybe not a change of trend, especially if we haven't seen any change in the economics or the macro factors, but it's just not a move I really want to be caught in. And then from there, again, if the drivers haven't changed, then we might start coming back down to these previous levels from 2022. So very simple outlook, nothing too crazy, but yeah, I just don't know if I really want to sort of hold that low, to be honest. If I did, I could collect around a 50% gain on this trade that I'm currently in, but do I really want to wait for that? I don't think I do, to be quite honest. So, is there anything you guys want to talk about specifically? Any more charts or any talking points? We've got about 20 minutes, and then Chris Pulver will be coming to take over. So you've got me for another 20 minutes, and then I am off. So let's see. Seems like we're still not seeing any long-term reversions here, apart from on the euro pound, which I wouldn't expect really to last very long. Dollar NOK remains overbought. Dollar CAD remains overbought. Euro dollar is very oversold. When I say overbought, oversold, I mean that in a very loose way, because I believe really in the market or the efficient market theory. I don't backtest. I don't think I've done a backtest for probably 3 or 4 years. Please check DAX. Yeah, we can have a look at the DAX. I mean, Yeah, it's not something I'd really want to go short, to be quite honest. I was previously talking about the channel that we're currently in on the DAX, which is, I think it's around here. Let me just double check. Yeah, so something like this. So I'm a little bit cautious of this long-term channel that we seem to be stuck in. But yeah, in the short term, I think selling it would be very risky. I mean, this trend is quite aggressive to the upside. So I'd really just be looking for pullbacks to start buying. So possibly look for a break and retest here on the previous resistance. Or you could also look for a pullback into this level of support. And this would allow this 200 moving average to come and help sweep the price. KDX, hello, I'm good, thanks. How are you? How's a potential South Korean move going? It's fine. I'm currently enrolled in a South Korean language course, so that's fun. But yeah, no real updates, to be honest. My girlfriend's currently doing a TEFL course, which is basically teaching her how to teach. I'm in a position on oil right now. Out of curiosity, are you looking for a pullback? Oil, yes, I would consider going long on oil if we get to pull back to 75. But to be honest, I'm not sure how likely that is. I have a feeling that I might have missed this move. I wouldn't want to enter on 77.6 or in that sort of range just because I would like a deeper pullback. Mainly so we could see this 200 moving average come in again, act as some sort of dynamic support in this situation. So it's not a trade I'm particularly interested in, but if the opportunity comes, I'll take it. Yeah, Bull out, good job. You did you did forecast that one quite nicely. Which lot size do you use to be open? That's a really open-ended question. Depends. Swing trading, day trading, DCA, what time frame, what assets. Yeah, I can't really tell you a solid answer for that one. Generally, if I'm dollar cost averaging on something like euro dollar or pound dollar, I'll start with a 0.3 lot size, and I'll slowly increase that by very slow. So it'll be like 0.3, then 0.35, then 0.4, 0.45, and slowly bring up my average price. But yeah, it really depends. And Andy Swa, yeah, no, I mean, don't always take what I say as gospel. Don't get me wrong, I'm a good trader, but I can't always get it right. So if your strategy and your research says short, look at shorts. Just giving you my point of view. It's not, again, I'm not always right. Godfrey, we just talked about. Oh, sorry, I thought you said pound dollar. My bad. Pound Australian. Yeah, we can have a look at that in a second. 400 lots, definitely not. I'm not at that point in life yet. Yeah. Well, okay, let's move on. Pound Australian. Now, this one really comes down to what the pound is going to do. So the thing I see here is Australian dollar is weak. Again, we've already discussed that slightly with the poor health of China. The thing is how is the data going to come out? So this move, just the same as pound yen, euro pound, they've all reacted from a really poor sentiment from investors with the pound due to the UK economy and the UK government debts. So investors now are expecting a rate cut by the Bank of England, or more rate cuts by the Bank of England. So yeah, it really depends how inflation continues to come out. If we continue to see a cool down inflation, that would be really good. But yeah, to be honest, I'm not 100% certain. on the pound yet. I am a little bit mixed because there is potential for the data and for the Bank of England to kind of start correcting this and bring the pound back up and bring some better sentiment. However, obviously, if they don't, then we are going to start seeing the pound in some serious trouble. So unfortunately, I can't give you a direction on the fundamentals because I'm relatively neutral until I have further information. Based on technicals, I'd be looking to go long. Let's say, actually, is this a... not really. There's no fib there, to be honest. But yeah, this support seems quite healthy. We've had a pretty significant move to the downside. So even if you are able to just catch a correction here, that would be fine. Or on the other hand, if you're following the trend and more of a momentum trader, wait for a pullback because the moving averages are bearish. We are in a bearish trend at the moment. Wait for a pullback and go short into this support level. Lee, I have absolutely no idea what that says, buddy. Sorry. Yeah, Lee's just put Squid Game rules in the chat. I didn't do Brent oil. Yeah, no, my Korean level is definitely not at that level yet. It's just a very basic. I haven't actually started the sort of tuition yet. I'm currently just doing the basics on Duolingo. So yeah, Brent oil. Brent oil is very similar to crude oil. So in the same situation, I'd be waiting for some sort of pullback into, I guess, this zone where we've seen sort of support resistance form. Beyond that, I don't see anything in terms of the technicals, unfortunately. You're learning Korean too? Why? Do you want to watch Squid Games without the dub or something? Euro pound's still really struggling. It's a bit frustrating to be stuck in this trade, actually. But there's just nothing to do. I can't get out. I can't add in. Just stuck, which is really annoying, but hey ho. So yeah, I think the only trade that I'm not in that I would be interested in is EuroCAD. Again, due to strong oil prices and a weaker euro, it seems like a solid idea. Euro pound position is boring. It's stuck in drawdown, but again, as I just said, I can't do anything. I can't really get out of it, and I can't add in. So just waiting for some sort of downside or upside. But yeah, just waiting for something to happen. Peter, I'll tell you the same as I told the last guy that asked about euro-dollar shorts. What does your plan tell you? What do your rules say? What does your research say? This is going to sound really mean. I don't mean this in a nasty way. But if you are coming to streams and you're asking people on social media what to do with your money that you worked hard for, you're not ready to be trading, because if you did this in the wrong stream, you might get someone saying, yeah, put X lots on gold or whatever it might be. You'll lose money and you'll come back thinking, oh, it's just a one-off, and then you'll lose more money. And you'll end up in a pretty bad spot if you always just take someone else's word for what to do with your money. Yeah, Lee, I know you're asking about my thing, but you said you're learning too. I mean, what are you learning for? Can I look at copper? Yeah, I can look at copper. It's not something I really trade, but we can take a look. In the same boat with Spanish. My girlfriend's Colombian. Oh, I see. Yeah, I'm learning Spanish as well, kind of. I mean, actually, that's a lie. I was learning Spanish for about 3 months, but I kind of stopped. Wow, copper's had a really good run, actually. What is this? It's up 10% this month. It's kind of crazy. I'm fairly sure it was on the edge finder. I just want to double check because this will influence what I'm going to say. Yeah, okay, so we've got a really bullish reading here on copper. So I wouldn't want to go short. I mean, we can clearly see this trend is to the upside. I would be looking for some sort of pullback off this resistance. Where to is the question. Possibly here. I guess this makes sense. So, and bearing in mind, this is going off pretty limited knowledge. I'm not a copper guy, but I think this makes the most sense. Again, following the trend, the momentum, following the edge finder, waiting for some sort of rejection, pull back into support, and then a continuation to the upside, I think is pretty likely. Korean's not that difficult, actually. Their sentence structure is very, very simple. So they wouldn't say, for example, they wouldn't say, I like this trade. I think, as far as I understand, it'd be more structured towards trade is good or something. I mean, obviously, I don't really speak it very well at all. But yeah, their sentence structure is very, very simplified. Because Korean, again, as far as I understand, Korean's derived from Chinese or Japanese. And it was simplified because the education a while ago in Korea was quite low. So they had to make it quite easy to learn. What's happened with euro dollar? Probably just digesting news. I mean, it's not really had a large. Oh, sorry, it's still copper. Yeah, I wouldn't say anything. It's still stuck in the sideways range, really. Nothing eventful here. Yeah, we've done NASDAQ, we've done the US indices. Just to quickly recap, though, because I've only got a few minutes left. There's nothing really that piques my interest. I suppose the only thing I'm aware of here is this descending channel that we've got. So I would more lean towards just going short off here if we're just following technicals. There's not really any fundamentals to make me want to buy or sell this market. Okay, Peter. So euro dollar, I would say, is definitely, well, actually, I probably shouldn't say definitely. I would say euro dollar's easiest path right now is to continue to the downside. Regardless of any noise that we see and any pullbacks, I would say that we are still going down. I mean, the trend is very aggressive. The momentum's aggressive. The fundamentals are still bearish for euro dollar. So I'm still looking towards parity. But yeah, in terms of actually getting in, to be honest, I have struggled, which is why I dollar cost average in, so I don't have to care too much about the entry point. You had the same idea on copper? Well, KDX, great minds think alike, as they say. Okay, so Tom says, Fed wallet, if numbers continue like this, it's reasonable to think rate cuts could come in the first half of the year. Yeah, I mean, we are still expecting, I think it's 2 rate cuts by the Fed this year. So yeah, I wouldn't say that's a huge move. I'm learning Korean because I'm moving to Korea. Well, I don't know. I'm still not 100% sure if it is Korea that I moved to. My girlfriend's moving to Korea, but I might be going to Thailand or Indonesia or Korea. Not 100% sure yet. The world is my oyster. I don't have stops on euro dollar. I'm a degenerate gambler. No, I'm joking. Well, yeah, no, I'm joking. My euro dollar position is dollar cost averaging, so I don't have stops. Quite happy to just keep clicking sell when we get pullbacks and then take profits when I'm happy. Camel, good to see you. Yeah, thank you, Royal Trades. Al, I don't trade crypto actively. I've got a ledger where I invest every week into Bitcoin, Ethereum, and XRP, but I don't keep up to date with what's going on in the crypto world. And yeah, I don't actively trade them, so I don't watch price action or anything. I just buy and hold. Everyone's moving to Thailand as a good country, or any other good country. There's lots of good places. Dubai, for example, is quite good, but I hate Dubai, so I won't be going there. Thailand, Indonesia is good. Cayman Islands, Cyprus is good for capital gains. Which one else? I think the Isle of Wight near the UK, I think they've got very low, if not no, capital gains tax. So yeah, there's lots of places, but you've also got to keep in mind that you're not, and this is something I learned actually from a friend of mine that does a lot of traveling and moving around. You don't want to make the mistake of moving just because there's low taxes or just because of the numbers. You've also got to think about how are you gonna, how expensive are flights for you to come back and see friends and family, or for them to come and see you? What are the living conditions like? What's public services like? All those types of things. You don't want to just move because of the taxes or whatever else it may be. Dollar NOK idea is not ready yet, just because of the dollar strength. The oil prices are supportive for the NOK, but yeah, it's not. The macros aren't in a position where I'm happy to get into a position trade here yet. I will probably go to it when we start seeing the dollar depreciate again. But at the moment, I don't want to fight it. WeGo, if you want to see my stop loss for dollar Swiss, you're gonna have to join Elite Traders. I don't do free signals, buddy. All the places mentioned really corrupt. You need people in the system. That's exactly it, Camel. Yeah, just because, again, don't move just for numbers. You've got to actually understand the country. Oh, okay. Fed Waller proposed 4 rate cuts this year instead of the initial 1 to 2. Interesting. Okay, I'll have to keep an eye on that. We've got a 7-day free trial, but then after that, it's $100 a month. But yeah, I wouldn't say that rate cut proposal is a huge deal yet. Again, it is just a proposal. It's not set in stone or anything. So we'll see how the markets go. But yeah, I think South Korea is probably the move. I mean, there's not really any financial benefits there, but I like Korea. I went last year. It was last year it was an amazing place. Yeah, data dependent. That's no real news there. So dollar's not doing too hot today. Obviously, we did have pretty negative news regarding the dollar today. Bit of a red day. The yen is doing very well, actually. The pound is pretty flat. The euro has gained slight. Well, actually, no, it's not. The euro's flat as well. Pound down, dollar. Yeah, okay. So nothing interesting. What platform do you recommend for Forex trading? It depends where you live. AL, if you're in the UK, I would suggest spread betting. So I use IG Market spread betting for FX on my main account because you get tax benefits for spread betting. But if you're anywhere else other than the US, I would just say go to CFD on MetaTrader 5. I don't really know about the specific taxes everywhere else. I'm not Korean. Well, I'm like 5% Korean. Yeah, guys, don't sleep on Korea. It's an amazing place. I mean, if you're from the West, you'll probably feel very out of place there, but you know, everything's really good there. Although I don't want to get the North Korean balloons of doo-doo dropped on me, so I'm gonna have to walk around with an umbrella. Well, you go. I just said it's a 7-day free trial. Then after that, it's $100 a month. Or you can just click on the website and find out. I understand you are position traders, both you and Nick. Why are you not touching gold yet? No, I'm not. I don't think either of us are really position traders. Nick, I don't want to speak on his behalf, but seems to show swing trades the majority of the time. I mainly day trade these days. But yeah, gold not really presented much of a reason to go long, to be honest. Yes, we've had some nice short-term bullish momentum, but again, there's nothing in the world that's really making me interested. So unless we see a very clear break above this resistance, yeah, there's not really much there for me. Yeah, Kong, I'd like to go to Japan as well. So my plan is for when I do move to Asia, I'll be traveling around. Because obviously when I'm in the UK, I can go to all the European places in about an hour for very cheap. So I've basically done all that. So at the moment, it would cost around, I think plane tickets are around £3,000 for me to take me and my girlfriend to somewhere like Japan and back. So it's a little bit financially heavy. So I'll be obviously traveling around while I'm there. Anyway, guys, Chris is here, so I will let him take over the show. Guys, thank you very much for having me. As always, I'll be back on next week. So stay safe. Have a good weekend. I'll see you all later. Thank you once again.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Thursday. Just taking a look here at the US 10-year yield. Nice little drop from yesterday. I don't think this necessarily is a big old trend changer, but we're going to find out. The correlation that we've seen, this has been really interesting. So the dollar basically bottomed out around the same time as the US 10-year. So let's go ahead and pinpoint this. Let's have some fun. We have the dollar, or this is the US 10-year. We bottomed out on September 17th, the day before the FOMC. Let's see when the dollar bottomed out. The dollar bottomed out. There is your September 17th, 18th noise. The dollar bottomed out about a week later. And it's not really a huge surprise that the dollar has been getting stronger as the 10-year has been rallying. So I think if you are wondering if the dollar is going to get stronger, well, then the 10-year is going to get stronger as well. It would be nice and lovely to see that the 10-year is going to drop, and that probably is a near-term correction in the dollar, which is great. But the news that came out yesterday, we had CPI yesterday, we had PPI. Market clearly got all excited. Okay, but looking at this chart, I think I talked about this yesterday. pretty clean technical analysis here. The market is making and has been since we topped out here. We have had 1, 2, 3, potentially 4 lower highs. 1, 2, 3 lower lows, right? So is it possible? I mean, we have one more day of trading this week. We have MLK Day and inauguration on Monday. Markets are closed. So what does it look like? I would be a little cautious of, and I said this yesterday, I'd be cautious of like a bull trap at this high. And I wouldn't jump in and short it necessarily, but if we break this structure, that we put in another resistance area and the market comes back and fills the gap and possibly has some momentum to revisit some lows. And, NASDAQ wise, we could still fill the election gap. We can come down and revisit, there's other gaps back here on the S&P. So I'm just not super convinced that this is the bottom. That's the bottom, and we're going to all-time highs again. I'm not convinced. If we do get to all-time highs, I'm still very cautious and skeptical of the follow-through. So I would say this: if we have a bull trap scenario, we can look for a, and again, it's going to be option trading for me, looking at like a bear call spread or bear put spread for something risk defined. I did put in a hedge this week with my traders and some of my services that were running some credit spreads and debit spreads. I put in a hedge trade. I did a 590. I think I did a 590 by 570. Let me double check that. SPY right here. Yep, 590 by 570. Put it in for $5. It has the potential to pay out $20. And I just need to see if price will make its way back into some lows. So if SPY is going to head back down to the lows, that was a 575 level. If we hit 570, I'll protect a majority of the profit. So I still have the measured move for the head and shoulders. If we have lower high, lower high, lower high, lower high, I'm a little cautious of like the 600 handle. If price came up to the 600 handle, I would just look to see if it fails. So if we have a bull trap, that's about the area we'd have a bull trap, right? I know Trump favors a weaker dollar. The question is can he get it? He can say he wants a weaker dollar. He can bully the Fed on Twitter if he wants to. Doesn't mean it's going to happen. I mean, the 10-year it's being traded by bond traders, and it's basically calling the Fed's bluff on a misstep in monetary policy. So Trump can say whatever he wants. Doesn't mean it's going to happen. He can say we're going to have Bitcoin as a national reserve currency. Doesn't mean it's going to happen. He can say that, again, it's very different. Government's pretty big, whether you like it or not. So, saying one thing and getting people to think that, oh, this is what's going to happen under Trump. I mean, it's probably so difficult to get anything done in the U.S. government, which is why the market for decades has loved gridlock over anything else, because it means nothing gets done. And that way the markets can continue to do what they need to do. But I'd say at this day and age, this stage, it's like we've had higher inflation for longer. It's certainly been felt the last 4 or 5 years. We've been operating around 4% inflation every single year. We've at least been outpacing inflation. So I have an interesting stat here. Let's see if I can go Twitter. And my boy Charlie Bolello. I'm just looking for one particular chart. Let's see here. Egg price is going up again. You got Mag 7 with the percent of index at 33.5%. That's crazy concentrated. Here's your CPI increase over the last 4 years, which is everything is more expensive. CPI, let's see what the number is. CPI auto insurance up 60%. Freaking nuts, man. This is the chart I'm talking about. Consumer Price Index, the actual CPI from 2020 to now has been about 4.2% annualized, while the Fed is telling us 2%, 2%, 2%. We're way above that, right? Over the course of the last 4 years, we're 11% higher than the 2% trend. And what's even crazier is the fact that, over the last decade, we have had 285 percentage points in inflation. If you're not getting a 3 to 5% raise every year, you're falling behind. On top of that, your purchasing power, debasing of the currency, it's ridiculous. On top of that, when you get higher inflation, it's a crazy uphill battle. So it sucks. And this is what's been being felt. And this is why people are annoyed and frustrated and, willing to go completely off, off script and say, we don't want a typical traditional career politician as president. We want some reality TV star. So anyway, it is what it is. We'll see what happens. It's 4 years, whether you like it or not. And we're about to see what the market's made of. So anyway, where we are at is currently making lower highs, lower lows. I think all-time highs are difficult to get to. I will say this. If we hit these highs and we fade from there, it wouldn't surprise me. If we somehow stretch on any type of renewed optimism to all-time highs, I don't think there's much momentum behind that. That's just my personal opinion. I'm not going to do anything foolish and just go all in bearish, but I would say I'm going to take some stabs at the market, probably put on some hedges. My hedges right now are going to be out to March. I'm giving myself a pretty big window that if we're going to see the markets decline over the next maybe month or two, then that would make some sense to me. Also, let me see here. I've got an issue. Let me see if I can go. Fudge. See if I can go. I've got a chart. I just had it yesterday in a roundtable that I did. Let me see if I can find it. Crap. That's all right. It was, I shared it last week. I don't know if I have the screenshot of it. Let me look. No, and I don't think my library for my snapshots are whatever. Anyway, it was seasonality. Seasonality for election years, with the previous party losing, new party coming in, all election years. Basically, Q1 of a new administration is a dip. Q1 is a dip, and there's typically an August, September dip, and then October to December is the rest of the year. So if you think about the seasonality this year, let's say we go from January to December. So I'll just quickly draw this out, and then we'll do some analysis. So January here, December here. You have basically a dip through March, and then a rally into May, and then it's pretty choppy, a dip into August, September, and then October to December. That's what, for 70 plus years, that's what election years have looked like. Now that's the average or aggregate. You put in a losing party and a new party coming in, then it's a little bit different where, it starts out where the dip is maybe a little bit more pronounced and it still has the same type of tendency. So it's very close to a Q1 would have a pause or a pullback. And then we have like a, pre-summer push. So like April, May going into the summer months, and then an August, September dip or pullback, and then finishing strong in Q4. I think a big factor for this year, like happening right now and lining up for earnings season, is going to be what earnings look like over the next couple of weeks. Like overall consensus wise, companies that are reporting earnings, who's reporting earnings, who's beating estimates. And I think this is going to be really, really key to see that, okay, if the SP500, maybe 60% of stocks beat estimates, maybe 65% of stocks beat estimates, maybe, I don't know how high it has to be, but to justify, us being at like, 3% off the all-time highs? What's the S&P away from all-time highs? From all-time highs to current price, we are about 2.5% away. On the Qs from all-time highs, where are we at from the all-time highs? The Qs are down about 4% from all-time highs. That's not that far away. So, I mean, to consider that, hey, the S&P just had like a 5 to 6% correction. Hey, the NASDAQ had about a 6 to 7% correction. That's nothing. Like that's a like minuscule peanuts correction compared to what a, bear market or a healthy correction or a deep correction could look like, But again, Qs you see here, lower highs, lower lows. SPY here, lower highs, lower lows. Okay, the Dow looks a little bit different because the Dow had such a nasty flush earlier. I do wonder if the Dow is trying to set up something like this. If we have any type of bullish pattern in here, is there a gap fill? And is there an accumulation that gets us back up to these highs? If this, I mean, it's a little messy here, but if this is a reversal pattern, Okay, if this is a reversal pattern, then I'm looking to see if the DIA will settle back into around 428 to 424. This isn't necessarily where I want to establish positions, although that would be a pretty good entry. I want to establish positions if we get above this neckline here, then I would say this has a recovery in its future. But the question would be, if we come up and just hit this level, is this a swing? This is a flat pattern, and this market has lower to go. That wouldn't surprise me. So like the bulls would have to break this and prove they want to go higher. The bears could potentially slip into getting the upper hand again and just drive prices a little bit lower, through the election gaps and, take out some structure. I think a lot of these indexes, if we get like a 9 to 12% correction, I'm way more interested in establishing positions as a bull. Way more interested. Being 2, 3, 4, 5% off the all-time highs, I'm not that interested in getting crazy, crazy bullish. That makes sense? All right. So just thoughts on the day. Okay. So 10-year we did. Let's talk VIX. VIX is down hard from yesterday. We're at 1602. Still, something to respect. I mean, 15 to 17 is around historical averages. Greater than 20 is a pretty good spot to be selling some premium. In the low teens, 12 or 13 or 14, that's really low volatility. You're better off, buying and being like you're better off being long options or being long volatility if you're getting down to those crazy low levels. But we'll see. It's been, somewhat elevated since we had our second largest volatility event from our first largest volatility event all in 2024. That is one takeaway, right? That's one takeaway from 2024 is a fairly simple bull market with a couple of hiccups along the way, but two outlier volatility events happened during December 18th and happened during August 5th. I will probably never forget those dates just because it was a crazy, crazy event. Anything in SPXY? No. DXY? I think a pullback is fine. A pullback is fine. There's a pocket right here on DXY. I've said this before. If we get a pullback on the dollar, okay, let's say the dollar pulls back here, takes out a low, maybe a little topping pattern, I would just wait for a trend line break. If you want to establish repositioning on the dollar for longs, I think the dollar has the ability to get to 114. Okay, the crazy scary move would be like if the dollar just blows through those 2-year highs, 3-year highs, and gets to 120. That would be like, that's the pain trade. That's like insanely dangerous. If the dollar blows through 114 or 115 and rips up to 120, how does it do that? If we have a 10-year yield, if the US 10-year is, let's say, 5.25% to 5.5%, okay, this is a big if, but if this is the case, we are probably blowing through these tops on the dollar. So just saying. If the 10-year is going to drop a little bit in the short term, then perhaps the dollar has a bit of a pullback. But I still think after this high taken out, this dollar is pretty well supported for more strength. Right? So anyway, point is, I'm not calling the top on the dollar now. I would be looking for dollar positioning. If we get a pullback, I'd like to consider dollar longs with some defined risk. If we come up to these highs, I don't want to call the dollar top here either without confirmation. All right? So just one big story. Watch the dollar 10-year yield. How does that play into the growth play, or how does that play into the growth of the equities market? Can we sustain these high valuations? All this is on the table for this year. Oil prices. That's a big smash down in oil. I'm not super surprised how volatile oil is right now. Energy sector declined pre-market Thursday. I did put in some fresh trades on XLE and the Pulver alerts. That's looking totally fine. I put this in, posted this trade 83, 82, 81. I just did some cash secured puts. I'm willing to own some XLE simply because it's a nice diversifier. I was in this roundtable yesterday with 7 others that I work pretty closely with, and a lot of the talk was energy. I'm not saying it's crowded when you have professional traders that are getting in energy, but I don't necessarily love the volatility of a stock pick in energy, right? Like there's a lot more volatility in stock picking energy plays because they can be all over the place. When we had COVID, for example, I was trading Halliburton, Schlumberger, BPA, I'm trading, Exxon Mobil and Chevron and ConocoPhillips. I mean, those are kind of household names, but like some of them are pretty volatile, and when it's like, this nuclear company and this blah, 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 like I don't, I get that it's exciting to have like a stock that could be up 50%, but literally can be down 50% too. So XLE is way less volatile. And if we have any outperformance in the energy sector, it will be reflected in XLE. And so even if this is just going to go up and hit a channel high, that's about a 7% gain from current price. Okay, so if we get up to around, actually take my numbers are way off here. I was going to the highs. It's about a 6% gain to get back to the highs. If we hit channel highs, we're looking at about a 10 to 12% gain. Not bad. Now, I'm going out to March here for the puts. I will probably continue to add some of these puts. If these are looking good for profit, if I've got about 85 to 90% of the $1.41 credit per contract, I'll just take the 10-cent debit and get rid of it, and then reestablish the position for like a 60-day option trade. Right. So either this is a upwards channel that I have drawn here, or this is potentially a sideways channel that I can still use the same levels of support. But if we go higher in energy, then we're talking AI infrastructure, we're talking utilities, perhaps we're talking nuclear, we're talking all sorts of different, energy plays. I'm okay with that. It's a way to have exposure. It's also, I don't know if it's lower. I think it should be lower beta. Yeah, lower beta, and it's also like one of the more non-correlated assets to trade against the S&P. So, for the most part, energy sector, especially after that big flush down in late December, it's one of the more beat up sectors, and it was a good opportunity to buy. I wish I did, added in some puts that would have been even lower at a much better premium, simply because the IV would have been higher. But I got in, yesterday. It's no big deal. These trades are fine. My 83, 82, 81 is right now way out of the way, which I'm happy with. If I take some ownership, I'm willing to own. This would be it'd be 300 shares what I'm willing to own, with a break even of 82, and then I divide the 141 by 3. So it should be $1.41. Where's my calculator? $1.41 divided by 3. So $82 minus 47 cents. Oops. So I'd own the shares at 81.53. Okay. So if I own shares at 81.53 and I get back to the recent highs, that's still a 20% gain. We get back to all-time, or these all-time highs here, that's a 25% gain. I would take that on a non-correlated asset. Okay, especially on a sector. I mean, I can't expect the sector to be like a tech sector that's going to be like 30, 40, 50% a year. An energy sector up 15 to 20% for the year is pretty good. Okay, let's take a look. I'm seeing some people comment about rate cuts right now. We'll see. I didn't see anything major. It looks like the market got all excited yesterday, like, on a more dovish Fed. It's like, what are they talking about? These probabilities have not shifted. This is still looking at 1, 1, 1, 1 cut only. I don't see where everyone's pricing in 2 to 3 cuts. I also don't see how this reflects that the Fed's going to hike rates. It's like there's nothing on here that shows hiking rates. There's nothing on here that shows more than 1 rate cut this year. So if we were going to hike rates, then we'd have to have a new table right there to show 4.5 to 4.75. I don't see that. It is nowhere on the calendar for the Fed Watch tool for the next, 10 months, 12 months. We're going out to December 2025. The only thing I see here is a probable cut coming in June of this year. That's it. I don't see anything higher than that. The only other cut might be in here where you can see some of the percentages. Okay, 38% for pause. The only one that'd be close would be maybe November, or I guess it'd be October or December, because we're at 35% pause, 32% pause versus a 30%, 31% cut. So possibly, but you can see here, like, it's not the highest probability. So right now the market's like safely, and highest probability is 1 cut coming sometime this summer, and that's about it. And if we're going to see a shift in that, depending on where inflation's at, where the Fed is at, by October or December, that is another potential cut later in the year. Okay. All right. Just food for thought. That's XLE. There's some sector plays there. Let's go back to, we did dollar index. Let's go gold, silver. We did oil, right? So I don't really know what to make of oil. I would say risk-defined trades. If you like oil long, okay, fine. That's a pretty nasty candle. There's a gap fill right there. We can come back and find some support around 74. I don't know. I don't believe that energy is just, oh my gosh, we're losing control of it. You know, so I wouldn't be surprised if oil smashes right back down. The ceasefire that's going on in the Middle East right now could probably also contribute to lower oil prices because it's more stability in the Middle East. So I'm going to stay out of oil. I'm in natural gas right now, which is a 2-year play. There's my NG trade. If we get to higher highs, that's great. There's my UNG position. I've got a diagonal spread out to 2027, and I'm selling against it every 60 to 90 days to lower the cost of my debit. But I'm going to be long natural gas. Gold. Gold's looking pretty good. I don't know if gold is getting back to all-time highs. And again, if it does, I don't think this is going to be a breakout trade. If gold gets back to these recent all-time highs, I think gold is going to be a range trade. Just my opinion. But I like where gold is at. Do I want to do anything with it right now? No, I don't. But what I hope is happening is that gold is up and silver is up. And silver to me is a better technical trade, so I can make some more money on silver. If gold goes higher and breaks higher, great. I'm still targeting 3,000 or higher. Okay. Oops. Get rid of that. If we get to 3,000, I mean, from current price, if we get to 3,000, that's still, 10% on gold for the year. That's not bad. I'd like this. If we had a range opportunity, let's say we get to these highs and we fall back to range lows. Well, if I still get a price target at 3,000 on positioning that I want to get in, that would offer from a 10% gain to now 18% gain. That's a big difference, which is also why I'm very patient on my entries for gold. So if we hit the same resistance levels here, just be careful on this current structure. If this thing breaks and sells off, then we can come back and revisit the same lows again, right? We can come back and still find the 200 moving average, which is what I'm waiting for. If we hit the same highs, just watch the range trade. Watch the range trade. That's all. But 3,000 is going to be my profit target. If we get there this year, I'll probably take some profit on gold. I have shares of GLD. I'm not doing a lot with gold futures right now because I don't get the contract timelines that I want. So I'm also going to wait for a better pullback. Silver, looking okay. We're probably going to see gold versus silver going upwards. I guess it's just hanging out at these highs. We'll see. I'd like to see this head lower for silver to start outperforming. So if silver, and let me set a chart alarm here at 32.25. 32.25. And that to me is, okay, so we had a bit of an interim top, potentially a bullish trade here, a little bit of pullback and accumulation. I like that trade into 35.88. So we'll just say $35.75 to $36 price target. That is my target 1. And then beyond that is another measured move for a fifth wave symmetry that is out to $48. So I would say for the next 1 or 2 years, I'm bullish on silver. I've been bullish on silver since we had this head and shoulders pattern down here. So we had this big rip during COVID. We had a really nice build up head and shoulders trade. I was accumulating and then getting that nice little surge for profit. I did take some good chunks of profit last year on silver. I'm still looking for more upside. That's my measured move. That is my symmetry target. Okay. So I like silver. Bitcoin. Bitcoin is 98. Are we in a corrective channel on Bitcoin? Could be. You see it responding so far. We have a high, we have a high, we have a high. These are lower highs. Are we going to head down and make a lower low? Is it crazy to think right now that Bitcoin, if we do something like this and the S&P does the exact same thing, is it weird to think that Bitcoin is now starting to get more and more correlated to the S&P? I mean, obviously there's a lot more volatility in Bitcoin than there is in the S&P. But man, would that be nuts? If the patterns that you're seeing in the S&P and the NASDAQ are looking at exactly like Bitcoin, that would be wild. So anyway, I still like Bitcoin accumulating at lower prices. Watch the levels. I think Bitcoin has potential to make all-time highs again this year. If that's the case, I'd like to see if the S&P and the NASDAQ can also make all-time highs. Okay. Pretty correlated with money flows, yes, but I mean, as far as gains, I mean, it's not even close. I mean, Bitcoin is way more volatile. right? You have a 50% pullback, 40% pullback, 60% pullback, and the ebbs and flows. I mean, if you're going to give the S&P like 3 to 4 times the volatility, then sure, it's correlated. But I just think it's interesting that there's more exposure now to Bitcoin by owning the index. SPY or QQQ has Bitcoin exposure. Okay, QQQ with MicroStrategy has Bitcoin exposure. The ability to trade IBIT has Bitcoin exposure. So anyway, point is something to watch. I'm still looking to see if we have a correction back into the 90 to 80K zone. That's what I'm looking at dollar cost average. I did take a profit on IBIT this week. I just had a credit spread. It was a 52 by 51. I closed it out for a 1 cent debit. So I took like 99% of the profit out of that today, which was nice. FPTC still doing the same thing. Bitcoin, MicroStrategy. I did a roll yesterday on MicroStrategy. I need to do, this needs to be updated. Hang on 1 second. I updated this yesterday in session. So MicroStrategy, 279. So I got a 321 expiration. All right. So my new break even, it's a 321 collar trade. And I rolled it up to a 310 and down to a 240. And my break even is 279.86. So my trade on MicroStrategy right now, if it gets called away by March, and I realize like when I'm playing around with collar trades and covered calls and buy puts, it's like I'm capping my upside. I'm still offering some downside protection. I'm choosing to do that. If I want to just go for the big home run trade and hope that MicroStrategy revisits $500 again, I'd love to have nothing in the way of that. But for defined risk and protection of the downside, I've lowered my cost basis by, what is this? $60, almost $70 in the last month. Power of options, I like. If I get it called away, 279.86 minus the 310, I now get it called away for a $3,000 profit. So I own 3,000. This is on 3 of my accounts. I get $9,000 over the next, let's say, 60 days. Okay, really quickly, I want to check something on expirations here. I want to look at some earnings as well. Most of it's financials this week. Going into next week, I'm curious where some of the earnings stack up. We can look at stock twits as well. I'll come back to that in just a second here. I want to see what the expirations look like out into April. Right now, April. Okay, so it's funny. I'm planning on closing on a house in mid-April, and April 17th is 90 days out. So I think that's good because within 90 days, I can look at discussing like rate locks or just at least get the discussion going with some servicers. So all right, good to know. Okay, that was a to-do list on my my agenda today. So this MicroStrategy, Coinbase still hanging in there pretty nicely. I have a 111 trade down here, looking good for credit into February. I can't believe I took that trade with only $1 credit. That seems like a little light, but I know the expiration is not out super far. Let me see what Coinbase looks like we're at a 29.3 IV rank. We have earnings on February 20th. I have the 21st. Like, how do I not get more premium out of that? Let's see. Let me look at, I might do another one. Coinbase. So there's my 111 for the 21st. I was wondering if I go out another cycle. So let's go out like March 21st and see if the premiums are just like not awesome. But I like the level, kind of the same thing. Like this one kind of 50 zone is okay. So if I took some ownership, I would consider ownership here. Coinbase would have to fall hard. We'd have to fall like 45% from current price. We would have to fall 55 or 56% from the recent highs. I don't think this is at all-time highs yet. Nope. Coinbase was higher. And I'm wondering if we are in a trend higher. Perhaps there's like deeper pullbacks and it still makes higher lows. But if this is a resistance becoming support, and this is an accumulation stage, like we could still see higher highs in Coinbase. So if I just did income trades here, one in February, one in March. I want to price one out right now and see what it looks like. Okay, I did the NASDAQ. I did it yesterday. I did it today. Here's Qs. This is what I see. Lower high, lower high, lower high, lower low, lower low, lower low. That's what I see. I think this is a bear trap or a bull trap scenario. I could see the CPI gap getting filled by next week. I'm not sure if the market is going to, prove that it's going to be bullish. We've got to get up here into open space, and we have to stay. I would say the Qs have to get above probably 525, okay, and then stay above 516. That would be, I would justify doing this. If we had a reversal pattern where we had this low, this high, this low, let's say we get to this high, and then we pull back here and accumulate, I would look for that level to break, and then we can hit all-time highs. So for me to be bullish, we got to spend some time on the right-hand side of this trend line and break this channel. If we don't do that, then this is resistance, and we're coming back down to fill the CPI gap and possibly making fresh lows. The election gap has not been filled on the NASDAQ yet. Okay, so let me go back to Coinbase here. I'm going to look at a trade. Let's see here. So premium wise, like the 160, I can probably do like a 111 here. If I do, I mean, it's almost, I only want to have 100 shares. So that's why I'm like, I could just sell a put. But I have a little bit more protection here if I took on any ownership, which I don't mind doing. So if I took the assignment at 150, -5, -124, I'd own shares at 143. That's the same thing I kind of did before, is either 111 or ratio spread. Let me see which one I can do for better ownership and better credit up front. So if I move this up a strike, 165 by 160 by 155, I would take ownership 155 -5 -155. I'd own shares at 148.45. 148.45 is right back down to the September low. I'm okay with that. I'm okay with that. So I'm going to take this trade. It's an income trade first. There's about a 95% chance of profit. Doesn't tie up a lot of capital. If I get a 148, well, I'll just say $155. So $155 on one contract over the 1206 buy power. That's a 12.8% return on buying power. If I did have the assignment, I would try to flip this for at least $1,000, which means I need to get at least $10 a share. I'd try to hold it for maybe $20 a share, like I'm doing a micro strategy, maybe making $3,000 per account. The premiums are good enough in this to do it. So do I like the trade? Yeah, I'm going to take this trade. This is a 165 buy put, 160 sell put, 155 sell put. Now, if it's better to do a break even would be around 148. Is it better to do this trade? If I delete this and I buy the 160, sell the 155 by 2, $1.50, I own the shares. It's about the same break even. I'm going to give myself a little bit more freedom and buy, sell, sell. So I'll do this trade right here. I'm going to buy the 165, sell the 160, sell the 155. If I do take on any assignment, that would be around 148. So 155 -5 and minus the $1.50. So about 148.50 be my break even. Hopefully I get filled here. I don't want to take less than 140, but I'm going to try to get filled at 150. So let's see what it looks like. Okay, 150 is not filling. I'll just go a little bit below the mid. I might have to go down to like 145, but I'll try to penny it down and see what my best possible fill can be here. And then I will look at that as a pulver alert. 146. Come on, coin. 145, 144. All right, I said I'm not taking less than 140, so if I work it down there and it doesn't fill, I'm going to cancel the trade. And final offer, 140. What is it? Doesn't fill. You got to be kidding me, man. Well, that's annoying. Mid price at 149. I'm asking for 140, and the broker's not filling me. So cancel that. Could I do anything different? Let's try another expiration. Let's go to April. Similar levels, 165, 160, 155. Same trade, same ownership, a little bit more credit, maybe. I mean, the open interest is a little bit light, so maybe that's where I'm not getting the fill. But this has a better bid mid ask. This should be better. I think this will be fine. I'm going to take this trade for April. So I'm going to buy the 165, sell the 160, sell the 155, try to get over $2 of credit here. Let's try that same trade for different expiration. So April, freaking no problem. That was weird. So I went out to April 17th and got filled on the trade. So now let's get this in for a couple of accounts here. 225 in the mids, 227, 224. Come on. 225 fill, no problem. Good. That's good. That's way better. 225 and 225. All right, so those are all filled. Good, 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 good. So I'm going to get this added in. This is coin. It is a 4/17 expiration. Buy the 165 put, sell the 160 put, sell the 155 put, collect the $2.25 credit. If I look at the mechanics of the trade, 94% chance of profit. And I'm looking at assignment risk of around 5%. So I'm willing to own, and the break-even price on that would be 155 assignment minus the $5 on the debit spread, and the 224, 225 on the fill. So 147.75 would be my break-even. Is 147.75. Okay, so that trade can go into the Discord. So I'm going to put this in under my stocks options trades. So new trade. $4.17 expiration. 165 by 160 by 155, 225 credit, 94% chance of profit, 5% chance of assignment, willing to own shares. If assigned with price less than 155 by expiration, break even price if I own it's 147.75. Okay, now I will get a screenshot posted. Add this trade in right here. So that's in April 17th. So buy the 165, sell the 160, sell the 155, 2.25 credit. So it's essentially the same trade, a little bit more premium, obviously, and it's an income trade first with the cash needed, if needed, to own the shares and repair it for $5 or $10 a share, hopefully more. But that to me is pretty safe to just take a trade, tie up some capital, make a couple $1,000 and then move on. All right. So I don't mind that trade, and ownership wise, like that's a pretty good level. And obviously if Coinbase goes higher, like if Coinbase goes higher, then I can't keep taking trades down here. I'll have to like start moving this, below this trend line. So I could do more income trades like this if we're starting to see Coinbase going higher. Okay, so that is posted. Let me get a screenshot here. Oops, that's not a very good clean screenshot. There we go. Okay. All right, screenshot is in. Okay, that's posted in the Pulver Alert section. All righty, Ethereum looking good. Copper has been on a tear lately. I looked at a copper futures trade. I don't know. I looked at this earlier the week. I thought I was trying to do like a 1-1-1 with a hedge. It didn't really pay a lot, so I didn't get the trade. Japanese yen futures. Did anybody see this yesterday? By the way, currency strength futures. Look at this crap. This was yesterday. Japanese yen during the CPI. I mean, this is like all night. This is 11 p.m. Eastern time, going into the entire trading session from like the London overlap to the U.S. session. I mean, that's a strong Japanese yen yesterday, and today it is the same thing. So, is anybody seeing anything fundamentally on the Japanese yen? I have been wanting to get long Japanese yen futures. The problem was I didn't have the timeline that I was liking. So, looking at 6J here for Japanese yen futures. So, 6J there. I can only go out to September, and that's just not long enough. This is how I would prefer to trade instead of trading currencies. I'd rather trade futures, and I just don't want to I don't want to go to September. I want to go to December. I want to go to January 2026. I'm hoping that these futures contracts will give me additional expirations. I don't know how long I have to wait for that. But point is, like, it's starting to show some signs of gains. I don't know if there is a discussion around the Bank of Japan starting to raise rates again. That might be why this is starting to get a little bit stronger and maybe pricing something like that in. Approaching intervention level. Nobody knows where the intervention level is. I mean, that's not why. Because if you say that, it's like we had intervention here, we had intervention here. It actually broke the highs. So don't tell me that's intervention level. It's not intervention. Okay, if we had intervention levels, it would be the pain trade that goes up to higher highs, and then there's intervention. So I think if there's anything going on right now, it's that the BOJ might be talking about going up another, 10 to 25 basis points, which would be the opposite of every other central bank, which is they're the only central bank that is raising rates, and it's going to potentially force the hands of the deleveraging, right? So if there's a swing trade opportunity here, dollar yen, if it sells off into this low, and then we have a swing trade, like this is a swing, this will be a pattern. I mean, if you've got a high, low, lower high, lower low, right? Like that pattern, I would be willing to put a trade on. Otherwise, this could be the same garbage that it's always given us, which is just this and this and this and this, and it's right back to the highs again. Then there's more of a trade that I would look to take. So on the Japanese yen futures, I'm going to just wait. I'd love to see this. See how this was like a falling wedge scenario? I'd love to see this starting to do something similar, where it comes up here, finds dynamic resistance, and then just works its way into this zone. Then we can get the trade where it's like, that's where I look to get long the Japanese yen. And if that trade doesn't happen, I won't take the trade. Like there's something I specifically want to see, and I want to see the right, futures trades and the right contracts. If I don't see that, I'm just going to pass in the trade. Yeah. So William says there, Bank of Japan discussed rate hike yesterday. Okay, that's fair. All right, Nikkei is flat, still garbage, still stuck between that giant July and August drop last year. Japanese yen, I'm still long FXY. I still have some shares of FXY. EWJ. DAX, Germany up to fresh highs. FTSE making a nice little rip. Argentina, I'd like to see a pullback. China, nothing too exciting there. EWZ is Brazil. Apple, down again. Amazon. I took a small loss in Amazon. What's trading for right now? I took like a 20-cent loss in this trade. Amazon. You mother effer. It would have been like a 10 to 15 cent win. I took a small loss this morning. Whatever. That's just annoying. Anyway, Amazon's good. I was looking at a liquidity level today at 225, and I'm gonna see if it gets hit by tomorrow. Just one of my like order flow softwares that I have, and 225 was the level. So look, it came back in a big way. I was down essentially $1.20 on the trade. I closed out for a 10-cent loss. Like no big deal. So this coming back up to my level, it's back to break even or better, which has been a pretty nice turnaround considering this trade started out, way down at 216. We've gone up, $9, $8 on Amazon. Google, got a bunch of trades out to 2025 on Google right now. Meta, I'm waiting to see if we can pull back or at least go choppy until this 200 moving average catches up. Microsoft, a lot of trades down here, willing to own it. Just play the income game for right now. This one might, I don't know. It might be a good trade just to throw some dollars at it, which that's not really, a trade, but dollar cost average wise, like that's not a bad spot. If we get back to highs, there's some gain there. I mean, if we get back to highs, that's a 10% gain. Not that excited. So I don't know. I'll do the income trades. Right now, I was looking at this, like if I put let's say I put $10,000 at it right now, and it goes up 9%. Well, I make $900. Okay. And I have to tie up 10 grand. Well, if I did this, I make $1.50, $1.60, $2.40. What is that? That's it's over $5.50 a credit, which is, not $900, but I also don't have to rely on the price going up, and there is income to be made, and I can just keep doing this and possibly make the same amount of money. So way less capital tied up, way more cost effective trading options, and I'll just continue to do that at Microsoft. All right, Netflix. Come on, Netflix. I want to see a deeper pullback. NVIDIA, 136. I've got the collar trade 140 by 130. Tesla. I did throw in a small trade on Tesla yesterday. I bought it at like 427. I just did $1,000. And I'm going to do the same thing here at 362, the same thing down here at 285. Maybe they get filled, maybe they don't. But I at least want to have something where if Tesla just starts to go ballistic, I want to have something at least making me some money. Is Tesla going to be $1,000 stock this year? I don't think so, but could it be $600 or $700? Could I generate some income trades here? Yes, yes, yes. Okay, Berkshire Hathaway, nice little response here. This trade's probably looking pretty darn good for some profit. We had a really big bounce off that 440 level. Let me check on this one right now. I got him for 225 credit on Berkshire. Let me have a look at this stock here. So Berkshire is there. Currently up around $100, and max profit is 225. Okay, bonds looking better on the 1 to 3 year, looking better on the 7 to 10 year. So far, looking better on the 20 plus year. Like we said yesterday, the yields, 10-year yield actually having some follow through to the downside. Oh my gosh. Oh my gosh. Cool. I would absolutely cheer this thing on if we're dropping back into like 4.4, 4.3. I would freaking love it. But does the 10-year yield dropping translate into a lower 10-year or a lower mortgage rate? That is the, I don't know. We'll say that's the $400,000 question, because that's about the average home price right now in the U.S. Even though that seems like no houses, like what house can you buy for $400,000? A 1-bedroom townhouse right now? And look, the fact that we have 30-year fixed mortgages, it's better than Canada. I know Canadian real estate is a whole another conversation. If anybody's in Canada, I hope that you're like refinancing / principal payments. Like, just, it sounds atrocious what could happen here the next 1 or 2 years. But either way, I'm watching that 10-year closely. We talked about some of the futures trades yesterday. Australian dollar futures, euro futures, pound futures. It's really a correlation of the dollar. Corn, soybean, wheat, and cocoa. These are diversified. This one's going pretty nice. This is a diversified commodity-based ETF. They both look okay. I think FTGC is better. You can obviously see that the price action's been a little bit more resilient. I'm gonna hope that we come back to like 2250 before I would consider getting long. It shows that there's some encouraging price action here. I suppose if there is a breakout, this is like not the trade that I want to chase. But if we came back down to these lows again, I would watch for that to be support and just buy support. If I buy low enough and this thing is basing, if I get a pullback and I can buy at like 2250 and we get all the way back up to $30, like that's a pretty good return on risk, right? If I get a chance to buy it there, that's a 37 to 38% chance, or 38 to 30% profit. Junk bonds tightening back up, so credit spreads, liquidity still pretty good in the markets. Chinese stocks, nothing impressive. Probably still wait and see. Probably still we've got to get some more news out of China by anytime. Like, they need to have like another bigger stimulus plan moving forward. I don't think it's necessarily going to solve the bigger issues. They're currently like ventilating the property markets. It's awful. Like, what's the domestic market in China has been just gutted. Like nobody trusts the property market, nobody trusts the stock market, and if that's not happening domestically, it's hard to get foreign money into that too. So they're trying to fan the flames and trying to get some additional stimulus by talking it. Obviously, they put in, what, $270 billion like in December or September. That's where we had this big run up here. The market got excited, but it clearly didn't follow through. So there's got to be some more, active discussions and active stimulus coming into China. I think technically the stocks themselves look pretty darn good. Issue is there's no follow through right now. So, I mean, I have some exposure. I've got Alibaba, Baidu, and JD. That's it. JD, I think I'm covered to 39 with collar trade. SCHD, SCHG, looking fine. I bought both of those late last year. Advanced decline, stocks above the 50-day. Okay, so we got a decent pop to the upside on stocks above the 50-day. It didn't come down low enough for me to kind of get the buy trigger that I wanted, so I wasn't just full-on index buyer. Costco, I'd like to see a flush lower. Walmart, I'm owning the shares. I'd like to see a flush lower to lower my cost basis. Nike, I've got a $65 and $60 put. Home Depot and Lowe's, we haven't had earnings on this, but came right down to that 200 moving average. That was okay. That's yesterday's CPI. Got it. So I was like, where's the gap from? CPI yesterday. Big gap of the upside. I'll wait. Lowe's, same thing. Big gap to the upside. I'll wait. MasterCard, Visa. I'm glad I got the heck out of those trades. So they had a nice little decline. I did some bear put spreads, made some profit on those. Johnson & Johnson, nice little pop to the upside as well. Progressive, nice little pop off the 200 moving average. CB, in the danger zone. This was one of the insurance companies that was getting hit hard on the fires and wildfires in LA, which right now is I'm reading reports that there could be like $250 billion worth of damage and claims. One of the most expensive natural disasters ever. So crazy stuff. But responded nicely. Did a little income trade here. That's just it. I'm going to do a little income trade, little ratio spread. I don't want the assignment, kind of, but if I get it, I'll take it. I'll manage it. But either way, those are looking pretty good for income. Palantir hit a nice little rip. I got a couple of ratio spreads out here as well. Carvana, not touching, but wow. Like I cannot believe how volatile the stock is. And I suppose in a good way, like coming right down to that 144, 200 moving average window. And this thing is up, what, $55 in the last couple of weeks. Like that's insane. Anyway, Redfin, Zillow, probably not touching. Sector-wise, pretty good performance overall so far. Let's see how sectors are doing for the year to date. I know we're only a couple weeks into the trading year so far, but let's go year to date. So we got real estate down, tech down, consumer staples down, energy leading the way by far. Energy, the best performing sector by a mile right now. And I wonder if, I wonder what else is going to be good. S&P is up 1%, energy's up 8%. Okay. Is it going to stay that way for the whole year? Probably not, but something to watch. Like there's clearly some rotation happening. End of last year, towards the end of the year, Mag 7's not performing the same way. Energy is like the no-brainer. If you ever want to diversify away from the indexes, go into energy. But it is a very beat up sector and has been for a while. And, again, you wonder if the big story in energy is AI infrastructure, having more electricity to supply the grid. And if we have nuclear energy as well, it's like all these things could benefit. So if we do have like this big energy reform, I would hope energy sector benefits. And like I said, I don't really want to be a stock picker. Okay. Joe, I don't care about DJT. I think that if you want to trade it, good luck. I have no interest in DJT. I traded it during the election. I traded this little crazy swing up during the election or pre-election. That trade's done. So I could care less. I think there's this is like a pump and dump stock. I've not seen this behave very, very well. It's not super liquid. It's not something I'm going to trade. If I did, it's going to be defined risk. Okay. So I think that'll do it for today. I told the team, so tomorrow I'm off. I'm heading back to the Midwest tonight, and I'll be back this weekend. But inauguration and Martin Luther King Day on Monday. I'm not sure if we're doing a session or not, but I'll be back around running my sessions on Monday as usual. So Chandler team, let me know if we're back on Monday. But I'm off tomorrow doing some travel. So I'll let you go. All right, thanks, everybody. Have a good rest of your day, and enjoy your Friday and weekend. I'll see you soon. All right, thanks, everybody. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow. Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.